Good morning, everybody. I'm going to give everybody a couple minutes to get logged in and for myself to get everything all set up on my end. And then I'll do introduction.
Was she okay?
So far.
Okay.
I got dogs at the office. You know, if you know me, you know I always have dogs. I got the old Chihuahua. She's good because she's deaf now. And so I don't have to worry too much. Not deaf, but hard of hearing. But I have the mixed mutt howler monkey here too. So we're kind of testing her out. So if I have to mute suddenly, you know why. Let me make sure I've got the right mic going. Yep. Okay. All right. Okay. All right, it's right at 9 o'clock per my computer. So let's get going. My name is Amy Knight with Knight CPA Group. I've got Courtney. Courtney, say your last name. I don't say it right.
All right, I had myself muted. Well, it depends on how authentic you want to be, but Buenteo is technically how it's said.
See, I can't say that very well. So Courtney's with me. She's my right hand. She's been my ride or die through all of this COVID. We keep calling it CARES Act, but we're past CARES Act. There's so many other acts that have happened. And so she's done all of the PPP and HHS reporting and lots of those things with me and for me. And so she's with us because she's the one that's actually gotten into the portal and started doing some reporting and put together some good materials for us. And so she's going to present with me to go through this. I did just in the last 15 minutes, I did send an email to everybody with materials. You know, typically if you're used to listening to me, I never send them until after the fact, but I did want to get them in your hands so that you could not follow along, but really take notes, because I'm hoping this is material that you're like, okay, for my situation, here's the answer or whatever it is. So I did send those. I did have a few people register here in the last few minutes. If you did not get that email, if you will drop me your email address in the chat box, I have it pulled up and I could just forward it to you very quickly and easily. So just let me know if you don't have that and we'll get it over to you. Zoom did not make it very easy for me to, after the event, I can easily download a registration list, but it won't let me before, so I had to copy and paste everybody's email address. That was a little tedious. So as these come in, I will forward them over to you, and then we will just get started. We're gonna do a lot of bouncing between screens. So I apologize. It's not going to be real seamless. I'm just all in PowerPoint. But this is really a working class and not me trying to look sophisticated and fancy. I can guarantee you that. So, okay, well then let's get going. I've got a lot of PDFs and let me get back to Zoom so I can share my screen, get technology working on my side. Screen two, okay. Courtney, do you see my PowerPoint?
Yes.
Okay, cool. Let me get it into slide view, and then I have to flip. I don't know why it always says backwards. All right, so let's get going. So again, we're going to do this. PRF, you guys, is too long to write, so it's Provider Relief Fund reporting, training. So a little disclaimer, I am sharing with you what I know, how I understand it, how the peers understand it. Things change. I do feel confident that they're kind of set in their, I don't want to say set in their ways, but the rules and regs have kind of been worked out. And so I don't expect a lot of changes at this point. Who knows what might happen, but I feel like it's pretty good. Also, little housekeeping note. I do have some polling questions I want to go through to start with. It's just to kind of take some demographics of the audience so I can kind of tailor my approach as best as possible, as well as if you have questions, I am here to answer questions, but please, please, please put them in the Q&A panel. So on your Zoom toolbar, there's one that says Q&A. If you'll post your questions there, it makes it very easy for me to facilitate answering them and marking them as answered. So I make sure everything gets answered. It also gives us a good record. And I will tell you, this is how we're compiling some of our information. We do have finally put together a document that is like a list of expenses that you could think about to see if they would qualify for your situation for this HHS spending. So put those in the Q&A panel. So let me just, let me go, next slide, we'll get to that in a moment. Let me go launch this poll real quick. All right, poll has been launched and it's like 4 questions all at once because I just wanted to get this out front. So first of all, the question is, do you have any subsidiaries that need to be reported as, like, do you have a group? Subsidiaries different than affiliates. Subsidiaries is you've got a EIN number that owns other providers. Like, you got the holding company that owns multiple providers. Do you have any of that arrangements? Second question is, did you get a targeted distribution? The general distribution is one thing. Targeted distribution is a different thing, and you need to know the difference between the two because you have to report on it that way. Third question is, did you receive payments in a later period? So anything after 6/30. The reporting, I believe, will be identical. However, you can only report right now, they're only taking reports for money received prior to 6/30/2020. I don't think there's going to be a change in what gets reported in other periods, though, by any means. And then lastly, is this your first time on any of my webinars or have any newbies? Just out of curiosity. And I had to get one smart aleck answer in there. So targeted and general. So first question is, what's the difference between targeted and general distribution? I don't have a perfect answer for this. There is a lot of information on the, let me rephrase that. I don't have those memorized. It is on the Provider Relief Fund website. They've got a great website with tons of information. But general distribution was that one that everybody just started getting. Like it was, they were trying to send out 2% of your net patient revenues back to you in this funding. Targeted was like the infection control. I know there were some like rural health clinics got some targeted distributions. There were, I feel like Indian tribes got some, but they're real, and like there were some COVID testing demonstrations. So it was targeted, a very specific, you're getting this money for this reason, as opposed to just the general 2% of net patient revenues. Do you have anything to add to that, Courtney?
Nope, I think that's pretty much it.
Okay. And I only have one newbie, I got two. I drink a lot of water. I talk a lot. I tell a lot of personal stories. I'm an open book. So forgive me on the water. I did not have to take a decongestant this morning, which is great. And I'm actually able to talk okay. So that's good. This is actually very early for me to start on a webinar. And the reason I'm worried about the howler monkey over here is because some of my staff isn't here yet. And so when they get in office, I'm afraid she'll bark, but she's kind of crashing out now. Okay, I'll end the polling question. Thank you guys for doing that. We've got, well, let me share the results for anybody that wanted to know. So not very many have subsidiaries, which is good. Subsidiaries, it gets more complicated. A couple had targeted distributions. Again, same rules, you just are reporting it a little bit separate, I think, right? Okay. And then later payments, again, I don't think anything changes there. It's just, unfortunately, you've got to report period by period, which is really a bummer, I think. And then most people have been here before, so welcome back. I appreciate everybody's continued support always. You guys keep me going. All right, well, let's jump into it. So part one, I want to go through the updates real quick. This is just a recap of what we went over. If you were joined us on June 23rd, the reporting updates came out with the timetables and everything. So we'll go through that. I would like to go through most of this beginning part pretty quickly. The program rules, this takes up, excuse me, a lot of pages in the PowerPoint presentation. And it's because I just didn't want to delete it. It's the same as what you saw on June 23rd. I did find some oversight on my part about lost revenue. So we're going to simplify lost revenue a little bit more. Again, a lot of it is copy and pasted from HHS information, and it's just there for your reference, and we won't dig into it too much. But I want to go through all of that so that then we get to the reporting and you've kind of got that foundation laid. I should have asked that, is there anybody that doesn't even know what we're talking about? I kind of doubt that. So feel free to slow me down. If I confuse you, let me know. If you need further clarification, don't be bashful to ask. I've got a question. We have two separate entities, operating entities with their own tax IDs that file a single tax return under a parent with a separate tax ID number. Yes, that's going to be subsidiaries. If you file under one, like consolidated tax return, those are subsidiaries. Oh, sorry, the question continued. April and our, let's see, they received their money in April, provider company received in November. Yes, so if you one payment in April, then you got another payment in November, those will be separate reporting. Unfortunately, I don't know why. I think they should just let you report it all at once if you've spent it all, but we'll see. But yeah, so Debbie, those will be two separate reportings. Okay, let's see. So real quick on these updates, basically the portal did, as promised, went live, which isn't on the slide. You'll know I'm not great. I get ahead of myself on slides. The required due date, your due date is based on when you receive distribution. That was news to everybody. I don't know that any of us saw that coming. Don't really matter. But it's based on when you received your distribution. We will get to, I've got a table of what that is coming up shortly. And I said it appears that you must report. You do have to report each distribution separately. And then let's just get to that. If you received less than $10,000, because I keep ignoring this fact, because most people we've seen receive more. If you receive less than 10,000, you don't have to do any reporting, okay? Now this is 10,000 during a single period, but it's aggregate. If you got an $8,000 payment and a $3,000 payment in a period, then that's more than, so it is aggregated within that period. So there's a new acronym, HRSA. I say new, it's new to me. I'm not even sure what it stands for. It's on some of our material. We'll get to that. But that is who is managing all of this reporting. So that is who sent out the email saying, hey, you need to register for a portal. And they're the ones starting to send out that the portal is open for reporting. And they're the ones that are just managing everything. So now I've already seen the terminology shift from HHS reporting to HRSA reporting. It's all the same. They are not two different things. So that's a little bit of a relief. You do have at least 12 months, up to 18 months to be fully spent on these funds. So again, it depends on when you received them. So funds received it in November and December, you don't have to spend those by June 30th. which is past. So there's more time still to be spent. So keep that in mind. Again, I've got a chart coming up in a couple of slides that shows that. Payment is considered received on the date the deposit hit, if it was the ACH, or the check date if you actually received a check. I don't know anybody that actually got a check. And I do have a question over here. It is all deposits of funds show up as HHS on the bank statement. Yes, my recollection is they all said HHS stimulus, right?
Yes.
So that's what that was. And that's how you know it. They've made it a little, okay, so you do need to follow, this is gonna be confusing. You guys are gonna ask me questions, it's not confusing. However you maintain your day-to-day accounting records, cash basis, accrual basis, is how you do this reporting. Does not matter how you file your tax return. And when I say day-to-day, I'm gonna say that a little bit loosely. I'm actually gonna back up on it. There's day-to-day, there's also financial reporting. If you have financial reporting done and it's done on an accrual basis, but day-to-day you operate on a cash basis, then I'm gonna say if your reporting is on accrual, you need to go accrual. So that's gonna be different for everybody. What I say is just don't change your method and say, oh, it's better off if I go accrual basis, but you've done everything cash basis for the last 3 years. So be careful with that. They also, this point here, they have made a little bit of a shift on. I'm frankly surprised to see it. You may use fund for eligible expenses or lost revenue. I'm sorry, this isn't the point that they changed. Or lost revenue incurred prior to the date of receipt. So you received money in April, yes, you can go all the way back to January 1. It does state, if you're claiming something prior to January 1, you need to have really good a reason why. If maybe you were in an area that, I mean, like I know Oklahoma had a big outbreak in, I say big, that's a relative term after pandemic. Before pandemic, it was a big outbreak of flu-like cases that all tested negative for flu. They think it was COVID. I find it, you know, I mean, I guess some practitioners could go out and stock up on PPE, but I would say to be cautious, I wouldn't report anything prior to January 1st, 2020. Let me just back up. What I was going to say that they did shift on a little bit, lost revenue. They were stating you have to report expenses first and then lost revenue second. That's still the case. However, it does state you can report 0 expenses and go all lost revenue. I don't recommend that. We'll get into all of that why. I think you need to count every dollar of impact from COVID, whether it's expenses or lost revenue, and you need to report all of it. If you spent 30, if you received 30,000 and you can account for 80, you report it all. That's my stance. I have reasons. Reporting is required for all recipients, general fund and targeted funds. And that includes the nursing home infectious control distribution. So I don't know that we have any nursing homes on the call, but we actually service nursing homes, so we'll be deep into that. And then they do not apply to some of this other stuff. Rural health clinic, that COVID-19 testing program, claims reimbursements from specifically COVID uninsured program, and then this CAF, this coverage assistance fund. No requirement for reporting on those. If you received one of those, you know you received one of those, okay? So if you're like, I don't know what that is, then you didn't, then that doesn't apply to you. Okay, here's the chart. Let's go through this. Let me get my little pointer. Okay, so where we're at right now is reporting for period 1. I previously said it's basically calendar quarters. That's not really true. It is basically from the beginning of distribution, April 10th. Y'all, I don't remember dates. That date I remember. I remember where I was, what I was doing. Through June Funds had to be spent by June 30th this year, so there's a full 12 months, or really, a couple more months if you received it in April. And then the reporting time frame. The portal is now open. It opened July 1st as promised. And then it's due September 30th. There are no extensions. There's no extension for reporting. There's no extension for spending. I've already covered that. I said I covered it. I read it in the FAQs. It's clearly stated. I don't expect them to budge on that. So if you don't report, they're going to come after you for recoupment. So I would not play around with that. Again, here's the site that all of this is going down at. It's super easy to find. If you don't have this link, just Google Provider Relief Fund portal. Comes up. You can get to it pretty easily. Again, they did open on the 1st. And reporting and metrics, keep this in mind. You need to have everything we talk about needs to be broken down by quarter from first quarter 19, okay, to through second quarter 2021. Now for 19, you're only looking at revenue numbers. You don't need any expense numbers from 19. But as you start reporting your spending on allowable expenses, that is quarter by quarter from Q1 2020 through Q2 2021. Everything's by quarter. Personnel metrics, patient metrics, beds and capacity metrics. And I've stated that over and over, but I just want to reiterate it. So that's kind of an overview. I don't have any open questions. Oh, also a little housekeeping note. I know me, I'm going to need a break at about 10:30, 10:45. So we'll take a short break. We do have 4 hours scheduled. You guys, I don't know that we'll go all 4 hours. I like having it blocked so that if we do, we've got, it's marked off on my calendar and yours. And if we don't, if we finish early, we finish early. I'll be here for questions. Please try to get all your questions answered here. I will not be able to answer questions after the fact like I usually do. We are buried in work. Mind you, Medicare cost reports are due this month too. I did get most of them done. Still have a handful to finish. So we're kind of buried, and I will be skipping out tomorrow for vacation. I leave tomorrow. Courtney leaves Monday. We're both gone for, a little while. I'm back next Tuesday. Mine's kind of short. I'll be back in town Tuesday, so back at the office Wednesday. So John, is the portal open for everybody regardless of when you receive the money? Yes, John. They actually wanted everybody registering back in January, and to be honest, nobody did. Courtney, how tedious is registration?
Oh, registration is super easy.
Okay, good.
Yeah. As long as you know your business entity information type and whatnot, yeah, registration does not take very long.
Okay. So that's all good. So we've been through that. It's not too painful or anything like that. All right, let me mark these off. So anyways, plan on a break about 10:45. It'll give me a potty break and let us go order lunch for the office. So it'll be here while I'm done because Amy gets hangry very easily. All right, so this is just, we're going to breeze through this. Brief history, April 10th, that's when they started doling out this money. What happened, honestly, is that the CARES Act came out 900 pages. Well, we all got hung up in the first 80 pages because that was PPP loan, and that was all the rage. Nobody got to page 700, or I think it was like in the 600s, where it had this HHS stimulus payments, this Provider Relief Fund. Like nobody got there. So we were literally on a Zoom call with some other peers doing, just talking, trying to figure out PPP, and everybody started blowing us up. I was getting text messages and emails, and the TAC, the Texas Home Care Association message boards just started lighting up. And so TAC had to come in. People were like, is this legit? Like, what's going on? And so that's why I remember that date. People just started getting money, didn't know what it was. But then there were additional phases of distributions, and some you had to apply for. And so that's just how this all rolled out. It was very fast and furious, and everybody tried to figure it all out. So let's see, real quick question. We have one tax ID for two companies. They have separate books and files, one tax return. So one tax ID, two provider numbers is how I read that. It really depends on how you received your money. With one tax ID, I'm assuming you got one payment because that payment was initially paid on tax. Well, no, it was paid on provider information. Courtney, how's that going to get reported? Okay, we're going to have to look into that, Maggie.
Yeah, I'm gonna write that one down because I'm not 100% sure.
Yeah. What's nice is when you get in the portal to do reporting and you put your demographics in, and we'll get to that. It actually populates what payments you received and what dates they were. So it's going to tell you. So I think when you put your tax ID number in there, it's going to know you have a couple provider numbers attached to it. It does give you some verification as you go. So it's not that you're just going in and filling in some blank forms and saying, here you go. It is validating your tax ID number. It's validating your payments received and things like that. So it should be easy enough, I would say, to get through. So, okay, sorry, I don't know that answer. Bear in mind, we're not anybody special that has like a special test login or portal, sample login that we can use. We have a gracious client that let us use his login and bug the hell out of him, because if you walk away from that portal, it will time you out. And every time you go log back in, you got to get a code. And so this only came out July 1st. We, the firm, took a nice July 4th holiday weekend. We didn't really start on this until last Tuesday. So we've been under the gun to get it all figured out in about a week. So bear with us as we don't have all the answers yet. All right, terms and conditions. This is where it's super vague. They said this money is to be used to prevent, prepare for, and respond to coronavirus. And it can be used on healthcare related expenses, which are defined very loosely, or lost revenues attributable to coronavirus. We will get into all of that. But what's important to remember is prevent, prepare for, or respond to. That's the key. Again, funds are based on when you received them as to when they're due to be fully spent, and then when your reporting is. Any funds found to be spent inappropriately will be recouped. Any funds that you did not spend appropriately, meaning you couldn't spend it all, will also be recouped or need to be paid back. Provider relief money cannot be used. Oh, a good one here. It cannot be used for the same purposes as any other funds. They stress this over and over, and they're not talking about just PPP loans. They're talking about FEMA. They're talking about, there was another one off the, any of the state and local. Okay, for instance, let's say the government set up one of those racks in your area where you could go get free PPE. You cannot claim the cost of that. A, it didn't cost you anything. B, it was provided by them. You can't claim that as an expense under PRF also, okay? And then they reserve that. Not only do they reserve the right to audit, I am going into this for the clients that we are doing this reporting on, that it will be 100% audit chance. They are not going to audit 100%. We are preparing every file as if it will be audited. I recommend everybody do that. I think there will be a high rate of audit. If you, and we'll get into it, if you use lost revenue alternate method, your chances of audit go up even more. And my point is, it's far easier to substantiate an audit if you put together your work papers, your packet right now when you're doing the reporting versus 3 years from now when they come knocking on your door. You may not have the same staff. You may not have the same ownership. What if you buy a provider and they get audited? Your responsible for that, or you sell your provider and the new owner comes looking to you for all of this information. Like, these are things, if you just put it together now, then you just sleep well, and you don't, if you get audited, you're prepared. This post-payment notice of reporting requirements is a formal document. It was last updated in June. We've pulled data from there. Again, 10,000 or more in aggregate funding, you must file the report. And then this FAQ and these latest updates, I actually downloaded the FAQs into PDF. They were updated last on July 1st. I have that will go out. It didn't go out in this morning's email, but it'll go out in the follow-up email is going to have a bunch of attachments. Okay. So, and honestly, I probably won't even do it through Zoom. I'll probably well, that's not true. I don't know. It'll have a lot of attachments. So be prepared for that. It might just come from me directly. It's easier to attach things that way. HRSA allowable expenses. So they put out this one pager of allowable expenses. It was worthless in my opinion. So I'm not going to include it. We are putting together a good list. It is more than one page at this point. And I actually have it open and it's still in Word format. And I did not send it this morning because I plan to add to it, because you guys come up with some of the best thoughts and questions, and that's where some of this is coming from. And I know I've missed a lot over the past 12 months that people have asked, and I said, oh, that's a great one. And I know it didn't make it onto this list, but I'm hoping that it's as thorough and helpful to you guys as possible. So what this document says is, it says, when you are considering if an expense is allowable, you have to ask yourself, is it necessary and reasonable to support patient care, to prepare for, prevent, or respond to coronavirus? So the way I pose that is, did you do this because of coronavirus? That's the key. And then, is it consistent with your organization's policies and procedures? That's a little bit vague, but that's fine. This first one right here, necessary and reasonable, to react and continue delivering patient care, right? Bear in mind that this money went out to lots of providers that were not deemed, lots of providers, and not everybody was deemed essential. Elective surgeries had to be shut down. Dentist practices kind of shut down other than emergencies. So home care, hospice was definitely essential. You had to continue delivering services, and you had to figure out how to do that. That's what I'm getting at. Did you pivot? And maybe it was something that you had planned on doing anyways, and then you had to accelerate it. That's the thought process you want to go through, because that document that I have that I'm going to send out, that's all this list of expenses. Just because it's on that list does not mean it's allowable. It has to be that you did that because of coronavirus. So just really plant that in your brain when you're thinking through this. Let me go through these questions real quick. Well, we just have one. Yes, this is a great question. And everybody can read the questions in Q&A, and you can vote on them and everything. We're not that big of a group to have to do that. But so Debbie, it does state you can't, the PRF cannot be used for expenses that were covered by something else. So the example is you paid hazard bonuses or hazard pay, and you included that with your SBA, your PPP loan as an allowable expense there. But so you don't claim those wages. If you put those wages on PPP loan, you can't put them on PRF. but you continued paying it after your PPP period, then yes, you can, those dollars. So it is about what dollar was spent, as to every dollar has to be put in a bucket, and it can't be put in this $1 cannot be put in two separate buckets. So you can't pay Sally $100 COVID bonus in June of 2020 and put it on your PPP loan forgiveness application and HHS Provider Relief Fund. Now, our advice from the get-go was, if you do any COVID pay, hazard pay, bonuses, whatever, don't put it on PPP loan, put it on HHS spending. Because people were having a harder time spending the HHS money and the PPP money, because they opened it up to 24 weeks, you could just use regular payroll. HHS doesn't cover regular payroll because that was already an expense you were paying. That was not additional because of coronavirus. We'll get into that. So before you go asking a bunch of questions about that, we're going to spend a lot of time talking about those very detailed specifics. So we'll get to that. It's just going to be a little later. This is some of the things that I literally copy and pasted, as you can tell by the formatting, to get it in. It's straight from their instructions. We're going to go into it in more detail. This was good formatting. I wanted to leave it here. It talks about what you're going to need to report on. Raul, the $150,000 idle loan is not subject to reporting. You have to pay that back, and therefore that is different and does not constitute a use of funds. So that idle loan could be spent on anything. So that, just kind of think of it as a bank loan, and it doesn't have the same kind of restrictions. So again, we've got general payments do get reported at the entity level, and targeted payments get reported at the subsidiary level. This may go towards Maggie's question, one tax ID number, but that doesn't, we're still going to get back to you on that, Maggie. I'm not sure. If your expenses, or let me rephrase that, if your payment was less than 500,000, your reporting, again, we're going to go into detail, is only in these two buckets. Like, you don't have to have any more detail. It's just, here are my general administrative expenses, here were my healthcare related expenses. If it's over 500,000, you have to break those down into these buckets. Okay, and then here are the healthcare buckets. The fact is, you have these expenses broken down anyways on your P&L, or you should, and if you don't, you need a good accountant that can do that for you. But they should already be broken down. And so this is, to me, just not very important, because really we're going to take the detail and roll it up together. Okay, this was their list of what expenses are covered. Again, we'll go into it in more detail, but supplies used in the to provide services do not get caught up on possible or actual COVID patients. You could have never seen a COVID patient. It does not matter. At any moment, one of your patients could have had COVID, could have contracted it, could have been exposed to it. It qualifies you, so don't get caught up on that. Equipment used to provide services, workforce training, developing staff and staffing emergency operations, developing and staffing compliance operations went on my list. So contact tracing in the nursing homes, staffing a whole separate wing and segregating people. And if you're in the COVID wing, you can't come over here. That required a whole lot more personnel. Extra personnel totally counts. Reporting of testing results, building temporary structures to expand your capacity, acquiring additional resources to preserve or expand. I kind of take that, I mean, if you acquired an agency so you could expand delivery of care and they were going to shut down, I mean, the acquisition price, no, that's an asset. no matter how your deal was structured, you bought an asset. Whether it was stock or asset purchase, it was still you buying a capital asset. But maybe legal fees, attorney fees, accounting fees involved with that, maybe. Again, all expenses should be on or after January 1st of last year. Dr. Franklin, I'm surprised to see you on this call. Thank you. Good to see you, even though I don't see you. Can this be used for payroll even if you got PPP loan? Yeah, if you got PPP loan, you just can't use the same dollars in both places. So if you haven't yet applied for forgiveness, you still have the opportunity to decide which dollars go into your forgiveness application. If you've already applied for forgiveness, even if you haven't received it, you cannot alter those numbers. And so if they were reported for forgiveness, they cannot also be reported as HHS. And remember, HHS needs to be additional wages specific to COVID, not everyday staffing that you were paying anyways. Okay, let's see. Another question about some supplies. You answered for me on last call, even though we purchased Clorox wipes, yada, 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 before COVID, that we do not need to exclude these costs. No, you're right. You're right. Oh, this is a great question, Debbie. Okay, so I keep harping that it's additional because of COVID. I'm going to put an exclusion on that. All of your PPE, all of your sanitation, Clorox wipes, Lysol spray, your mask, your gloves, all of that counts for this purpose, even if you were already purchasing those things before COVID broke out. That is kind of an exception. And actually, we've gotten into, they've opened this up even more, and it's on some later slides. They've even opened it up to include like your accounting software, your payroll software, your EMR software. That's a big expense. You were already paying those things, but now they're saying they're going to let you use HHS to cover those costs as well. So I need to, I guess, pull it back when I say additional because of. That doesn't apply in every case. It really applies in payroll though. And I think that's where I mean to stress it and maybe not let that spill over to everything else. So in reporting for forgiveness, your entire payroll reports had to be given to show, how do you say the bonuses were not part of the forgiveness and claim that on HHS? Well, the way we did it was we prepared a lead schedule for the bankers, and it was, here's total payroll. You already had to back out family first, sick pay, extended family medical leave, those had to be backed out. And you also had to back out any highly compensated individuals, that overage amount of over 100,000 annualized. And we just added lines, COVID pay, COVID bonuses. We backed all those out so that it was not included, even though it was on the payroll reports. And the banks, so in our minds, we excluded it that way. So that answers that one. Okay. Let's see, did I get through this? Full list of expenses, yeah. Let's see, okay, lost revenues. This is completely revamped. I deleted all my lost revenue slides and redid it. This is what I was stressing over yesterday and last night. So give me a second, we'll get through this. Now, I was pretty sure I changed all of these little I to 1, 2, and 3, but I clearly missed a slide. See, this is why I don't like sending them out ahead of time. Courtney, will you make a note that I need to fix that?
Yes.
I did it like this because that's how they kept referencing it in all of the HHS materials. But then I did see it numbered 1, 2, and 3, which to me just makes more sense. And so I missed a slide. Anyways, there are 3 ways to compute lost revenue. This has been a highly debated topic for a year now because it was late July last year that Erin Valier and myself, she's with AlayaCare, which is an EMR software, and she came on and really helped us figure out how you could use any EMR to kind of tag patients and tag people not wanting to come on service and tag it COVID related. And that was last July. And so here we are now. It's gone through several iterations to kind of wind up back at the beginning of where it started. I did try to get Erin to sit in on this call, but her calendar is public and I didn't get it locked down soon enough. And she also needed a couple weeks to prepare, and I don't roll like that. And so anyways, her calendar filled up during this slot. So I said, oh, we'll miss you, but we'll roll without you. All right, so option 1 and option 2 are pretty simple. They're plain vanilla. Okay, option 1, actual revenue quarter by quarter is less for 2020 than it was for 19. If your patient revenue, we'll get into the definition of that, is less in 20 than it was in 19, that difference is lost revenue. Plain and simple, report it, good to go, move on down the road. Option 2 is budgeted revenue for 20. And I'm still a little confused on how this is written now that I look at it again with fresh eyes. Compared to, it really should be compared to actual revenue of 20, which is how I had it. But they kept saying your baseline is always 19, but you would not compare budgeted 20 to actual 19. You would compare budgeted 20 to what did 20 actually do. The reason this is important for many of you is many agencies are in a scaling phase. Like you're scaling, you're growing, you're in growth mode. So even though your revenue dipped in 20, it may not have dipped below 19. And so that excludes you from this option number 1, which is super simple. But if you were growing and you were like, let's say you're growing at a quick pace and you dropped, like here's 19, say 19 was flat and you're scaling 20 and you dipped, but you didn't dip below 19, you just dipped. They're letting you count that dip if you had a budget. I need you to read between some lines here. And I'll get into it in a minute. But if you had a budget and you knew what that was, you need to have that budget documented and say, this was our budget, this was our trajectory, we were rocking and rolling, we were adding 10 patients a month, and then we dropped to only adding 2 patients a month. You're still growing, you're still more than you were in 19, but you dropped considerably. Then we can quantify that difference, but it's straightforward and easy if you have a budget in place. If not, then we got to go to this alternate reasonable methodology. That's going to get a little sticky. So let's jump into that. Again, option 1, oh wait, let me go through the rest of this. You can report 0 expenses and use lost revenue only. I don't recommend this because everybody had additional expenses. I have a very small provider in West Texas. She says she didn't, and she's small, and she had a rack come into town, so they got all their supplies from there. Okay, maybe that's an unusual one, but I find it hard to believe that most people didn't have expenses. When we get into the reporting, you're going to see that it says, okay, here's your PRF spending, here's your lost revenue, but it also has a place for unreimbursed additional expenses. That means expenses over and above what you've claimed for your PRF spending. The way, if we were to look back at the grid of the timetable, it talks about distributions from, oh, we're getting a lot of feedback. Is anybody else having sound issues? If you're getting feedback, you might like change mics. Oh, other people are getting feedback. Okay, let me try something real quick. I'm thinking feedback comes from the mic. Okay, let's go with this microphone. Sound any better? Courtney, do I still sound okay? Okay. Worse. I had to cut out. Okay, well, let me flip back to my Yeti mic. Sorry about that, guys. But thank you for letting me know. Oh, okay, Tim said it's better. No feedback here. So some people are getting feedback. Okay, sounds clear now. Okay, so maybe we're in the clear. Thank you, guys. There's nothing worse than that. And something about my car has an echo when I call people, and they hate me when I call them, my whole family. And I'm like, it's just me. I need to fix that. Anyways, okay. Okay, so my point was on that timetable, it references distributions from 7/1/21 to December 21, if I'm recalling correctly. It's talking about distributions that haven't happened yet. So that makes me wonder, inquiring minds want to know, are there going to be more distributions? If you can report a lot of extra expenses that were way over what you were already paid, lost revenue, you were highly impacted, is there a possibility they're going to dole out some more money to reimburse you for those that you've already reported? That's my thought. Okay, so I say you gather every expense, and it's going to take a little time. It is, it really is. I know it's tedious, but I think it might be worth it in the end. I also say, okay, let's just say they don't dole out any more money, but let's say some of the expenses included were a little bit aggressive and questionable as to whether they would fly or not. Then you have backup expenses of like, well, all of this, right? So let's report it all, and hopefully most of it sticks is kind of another thought. Okay, revenue. So when we're talking lost revenue, we're talking about revenue from patient care. If you've got management fees for managing a sister company, that doesn't count. We're talking patient revenue. It's going to be your patient care charges. It's going to be less contractual allowances, less bad debt, and prior to netting with any expenses. That is put in there because there was confusion back in the fall. They said, oh, well, we really mean net income, which was totally a bad call, instead of gross revenue. So they were saying, oh no, it's after your patient care expenses. They recalled that. So, but that's why they've clarified prior to netting with any sort of expenses. And it includes out-of-pocket charges. Not exactly sure what that's referring to, but I did include it. Let's see. A couple questions. If we took patients on service for clinics that were closed due to COVID, but were unable to bill because the patients did not have face-to-face, but rather a telehealth face-to-face, can we use that lost revenue towards HHS? My answer is yes. Document it and create a narrative. When I say create a narrative, we'll go over that more too. I mean, like write it up, like a memo to file. Here's what we did, why we did it, how we did it, why our justification, as much detail as you can. What if we did not lose revenue, but use the whole PPP loan for payroll? That's okay. A lot of people did that. So no problem with that. Okay, revenue is reported by quarter, but also by payer mix. So you're going to need to be able to break this down into these categories.
Again, Karen has a question in the chat.
Oh, okay.
She says, do you report expenses by quarter? And is it a carryover from one quarter to the next?
So yes, everything gets expenses as well, right? Expenses are reported by quarter too.
Mm-hmm.
Sorry, everything is reported by quarter. And so an expense is in a quarter, right? So it really shouldn't carry over. And your quarters are just going to accumulate. Like, let's say you had 50,000 and you spent 20,000 in the first quarter reporting and 10,000 in the next quarter and 10,000 in the next quarter. It's going to aggregate to use up all of your funds. So I'm not sure about the carryover part. Now, lost revenue might even be, let's, while we're right here, is taken on a quarter by quarter basis, and I have it covered somewhere. And it does not want, like if you have an up quarter and then you have a down quarter, they stand alone. And the up quarter does not decrease or offset the down quarter. So let's say you were up 10,000, then you were down 30,000. The 10 doesn't count. Basically, if it's a plus, it's just zero. If it's a minus, you get the full amount. And then it doesn't kind of roll quarter to quarter. Each quarter stands on its own. That's a very favorable decision by HHS, thankfully. So hopefully that answers that. So option one, actual revenue, again, which is what I was just kind of talking about. This is just financial statements 1 year versus financial statements another year. QuickBooks, you guys, if you use QuickBooks, run a profit and loss statement standard, run it for the whole year, and then there's a setting, and I think it defaults to total. If you change it, if it drop down, do by quarter, it'll show you your quarterly revenue for each quarter. Super simple. Run it for 19, run it for 20, you're good to go. Let's see, option two. Again, I swear I read that they were comparing to 2019 actual patient care revenue. That just doesn't make any sense to me. Well, on our little break, I will look at this because this is bugging me really bad. I will look at that. I know exactly where to go to find it. So bear with me on that. Again, it's quarter by quarter, standalone. Here's the catch on this one. The budget must be in place and signed prior to March 27, 2020, must be submitted into the system, and must be accompanied by a CFO, CEO, or somebody assigning authority, an attestation that this budget was in place and in operation prior to the pandemic.
Amy, I have an update on your budgeted patient care revenue.
Yeah.
So yes, I'm looking at the spreadsheet, the documents that we prepared. And yes, so using your 2020 budgeted revenue, you're looking at your 2020 budget compared to your 2020 actuals.
Okay. Y'all, it was late. I told my team, I said, look, I'm going home. I'm going to pull an all-nighter. It wasn't an all-nighter by any means, but I did go home and it was late. And that's when I started questioning that or changing it. So, and then when I was done, I said, I'm done. I'm not, and everybody reviewed for me this morning, but they didn't review like factuality. They were reviewing punctuation and typos. So we will get that updated. And unfortunately, I can't even update it right here while I've got it in this display mode. But that obviously makes more sense. But again, you're going to have to provide that budget signed with an attestation. Option three, alternate, what time is that? I want to make sure we do get a break in. Okay, good. We got time to get through this. This is one that's, I don't want to say it's going to get sticky, but it's going to, should not do presentations late at night. This needs to be deleted. This is the one where you're going to have the most flexibility. You can get creative. I worry about it because of this point right here. Well, two of them. All recipients seeking to use an alternative method face an increased likelihood of audit. I am not interpreting that. I'm not making that up. I'm not trying to scare you. That is verbatim from their document. If you request an alternative method and they don't find it reasonable, they will notify you and give you 30 days to resubmit using one of the other two options. So my thought is, if option one works, you use it. If option one does not work, but option two works, you use it. If neither of those show lost revenue for you, then you use number three, but you stand the situation that it may not fly. So, it's reason for pause, right? Here's what they say you have to provide. So if you choose this alternate method, you must include a narrative document. So what is your methodology? Why do you find that it's reasonable? The calculation, like you need to show a spreadsheet showing all your calculation, and then any additional supporting documentation. So let's go through a scenario and let's talk about, I'm just going to pause right here for a little bit before we dive in. The rest goes into what the reporting metrics are and like staffing numbers and things like that. So I want to spend some time right here for a second. Lost revenue. What if in your EMR, you are really good at using it to its fullest capabilities, and as patients started declining service, you started flagging them. Decline service, decline service, decline due to COVID. I would be clear about that, right? And you can quantify, especially, I mean, like a PAS provider, client won't let you in their house. If you can document that and note it, to me, that is lost revenue. You take hours of service that are normally provided to that client each week, day, week, month, quarter. Sorry. Forget about my 10 o'clock alarm. You document it. Be careful about patient information, but you want to have some kind of identifier as to who the patient is. So be careful how you put this in your spreadsheet stay HIPAA compliant. But my thought is you create a narrative document that says, we had patients decline our services, would not let us in their homes because of COVID, scare of COVID. We were a high infection rate period and in our area. I mean, like I'm like going to the extreme. Let's say you were in McAllen and there was El Paso. El Paso had big outbreaks, right? You're in El Paso, services, people just started declining service left and right. And you can document that and maybe even take a news clipping or quote an article or a headline somewhere like that shows how bad it was, or maybe you go find the statistic for your county for that month or that quarter. I'm saying you throw the kitchen sink in here. The more you can put in, the better your chances are. But to me, this is still a very plain vanilla. This patient usually had 30 hours a week. We get paid $13.92 an hour. It's this much money. To me, that's very easy to quantify. So your narrative is your explanation of why you've gone this route, how you've calculated it. Then you're going to have a spreadsheet, which is where you need to be careful with your HIPAA compliance. And you document I would say every patient, range of services, days or hours of services, and quantify that out. Show your math, show your math, show your math, show your math. Please understand that the people that pick this up are not accountants. Show your math. The way we're doing this is we are making dummy proof packets. I want every step of math shown so that they're just tracing this number came from here, and then this additional supporting documentation is reports right out of my EMR. Like, what do you have that you can actually, and maybe you don't have anything, right? But maybe you have a report that shows what your average, your normal units of service were for January, February, March, April, whole cow, May hit, and you show those actual numbers. And that supports your spreadsheet to say, this was all the declined services, right? That's the kind of detail that you want to put together. What we're going to do is maybe even hand it off to a rookie on the team and say, hey, can you follow these work papers? So we're going to do this for our entire reporting package. So for all the expenses we report, all the lost revenue that gets reported, we're going to have a whole entire packet. And it's going to start with what us accountants call the lead schedule. And that lead schedule is, here is every number I reported. Here's the total. Here's our total reimbursement or our funds received. Here's how much was not spent or overspent. And here's every work paper to show you where these numbers come from. And it's going to have, for expenses, it's going to have all the invoices and or receipts that were because of that. Like, an expense cannot be claimed if it doesn't have an invoice or a receipt to go with it. It's going to have payroll journals that show the payroll hours paid for COVID or COVID bonuses. It's going to have any lost revenue calculations. It's going to have lots of narratives. If there's any expense that is somewhat questionable of our rent went from 5,000 to 7,000, we're claiming that additional 2,000 a month. Okay, well, why are you claiming extra rent? Oh, we're claiming that because we had to expand our office to spread everybody out so that we could maintain social distancing. That's a legitimate expense, but you've got to have a narrative to go with it to explain why you're including that with your expenses. Now, on the expense side, none of that's going to be uploaded. It's more for documentation purposes. So that's how we're going to approach that. So let's see. Okay, Carlos says, I have significant lost revenue reimbursement to take. It is computing in the PRF reconciliation, but it's not taking it in when I get to the end in the PRF summary. What am I doing wrong? I am not sure yet. We have not gotten through reporting on a whole lot yet, so we haven't had that issue arise. It might only take into summary. The summary may only go up to the amount received. So if you are trying to report over the amount received, it may not show up on that summary. I'm not exactly sure. So we'll kind of circle back around. We've got lots of screenshots. So we'll let's leave that question up there so I remember. What if your reimbursement rate was higher in 20 than 19, yet your billable hours were down and expenses up? Wouldn't the billable hours be more representative of effects of COVID? Yes. Yeah, John. The powers that be tried to really simplify this by this whole like just revenue up or revenue down. But I think your methodology here would be a very good alternate reasonable methodology. And by that, you just show that your units of service were down by this many numbers. And your reimbursement is higher. So therefore you don't qualify under option one, but because your units of service are down, if you'd have gotten paid for those, your reimbursement would have been much higher. I would quantify those and I would count those. And to me, that's a legitimate use of lost funds, lost revenue. What I worry about on lost revenue are getting into situations where you're doing like 3 or 4 different methodologies. So I've got, because in the beginning, we're like, oh, you can count lost revenue you can count like lack of referrals from your, let's say you did a lot of orthopedics. And so your knee and hip replacement surgeries got shut down, your elective surgeries were all shut down. So your referrals even dropped off. Well, that's one thing. And you have to be careful. So if your referrals drop and you count that, you cannot also count a drop in services. That would be duplicating the same thing. What I would say is look at all of your different methods, lost referrals, decline in services rendered, which could be visits, episodes, census down, hours down. Maybe your PAS and you didn't lose any patients, but they backed off on how many hours of service they took to try to say, hey, we want a little bit, we just won't want to expose ourselves as much. I don't know if that happened at all, but that could be a possibility. Take all of your pieces that you could possibly quantify this on and go with the least risk and apply that to the highest risk. So least risk first and the highest risk next. Lost revenues. Can we strictly identify the actual 2020 lost hours of service due to COVID for each client and use that to calculate instead of comparing 20 to 19 actual revenues? Yes, you can, but that would fall under option 3 because option 1, the actual revenue 19 versus 20, you have to upload P&L 19, P&L 20. No explanation goes in with it. If your numbers if those reports do not show the lost revenue that you're trying to claim, it falls under option 3. I kind of feel like, I'm just guessing here, I kind of feel like this higher risk of audit is mostly going to be because people are going to get really creative with this. I think if it's something as plain vanilla as decline in hours at an hourly rate, and you can show, instead of a P&L, you show total hours for 19 by quarter. Again, do it by quarter, since that's how all the other reporting is. Total hours by quarter, 19 versus total hours by quarter, 20. And then just quantify that. I think that's going to get you through. I still think there's going to be a large audit percentage. Here's the thing. PPP is going to be audited. ERC credits are going to be audited. But this HHS really came out to a small population if you think of the national economy. It came out to healthcare providers. Well, HHS is like, all right, home care provider, I'm giving you this money, but I know you probably got a PPP loan. You probably maybe filed for some ERC credits. You probably got an EIDL grant. You might have got an EIDL loan. You got all this other money plus this HHS. So we're going to be looking at your business. As a matter of fact, as we get into it, it does say that you do have to report. You have to report all of your other funding as well that you did receive. State and local government funding needs to go in there. If you got any little special grants or anything, you got to report all of that. So they're going to know all the other funding you got. And I think that is going to increase. That's why I feel like the chance of audit is going to be higher than normal. And let's be real. If you're a Medicare home health or hospice provider, when's the last time you were audited in a financial audit? Not ZPIC, not UPIC, but like your cost report audited. It's been many, many, many years, many years. So that's kind of where my career started, was supporting providers through a Medicare audit. It was my job, was to go down and schmooze the auditors. So I did a good job, I think. Okay.
Before we move on, we have one more question. Karen posted in chat, do you report ERC credit even if you have not received it yet?
You know what? I don't think you actually report the ERC credit, because I don't recall seeing that one on that list.
I don't either.
It's not there. I just threw that out because they know that there's a lot of money going out under that. And so I just think it puts them on heightened alert that there's already been so much free money given out. This is even more of it. We're going to scrutinize. Whereas like a restaurant's no longer a good example, because they now have the Restaurant Relief Fund, and that's very similar to this. But let's think about my pool service contractor, right? It's a bad topic for me right now, but my pool's still kind of greenish. But they didn't get anything else. They got a PPP loan, but there was no other government body throwing money at them. I'm sorry, I don't mean to say it like that, but there were no other relief funds available to them. So they don't have these higher audit risk. But with healthcare and the fact that this money came in lots of different forms, I think nursing homes are going to face a large audit risk. We're just going in prepared that we're going to be prepared for audit representation. And I am not for hire in 3 years or next year or 2 years when you get audited. I'm not for hire. We are really focused on our monthly work. We're trying to get out of all this extra COVID help. We are doing the last thing where we're no longer taking PPP 1 forgiveness applications. We are still taking PPP 2 forgiveness clients. We are taking HHS Provider Relief Fund, this reporting, full service clients. After that, that's it. We're just doing we got to get back to our monthly service. Our monthly accounting practice has really grown. It's been great. And we want to get back to that. So that's why I'm saying do it now, because it's going to be so much harder to come back later and put it all together. Okay, what do we got next? I kind of went backwards, I think, a little bit. Okay, additional reporting, again, per quarter. You're going to have some personnel metrics. This is a little bit, ugh. So be sure you're ready to do this. They want you to report, and I've got this in yet another slide. Full-time, part-time contract, it actually goes further than that in my other slide when we get into the details of reporting. It's furloughed, separated, hired. You got to have all these categories. There's also patient metrics, and then there's facility metrics. There's also change in ownership. You got to kind of report some of that information. I'm not going to go into all of that. If you have a change of ownership in the middle of this, the FAQs have FAQs are great. They're 80-something pages long now, if I'm not mistaken. They're really, really, really useful. They will be included. They're on the Provider Relief Fund website, but I'm going to include the PDF just straight from them as one of the documents that I send out. Lots of info about change of ownership, but also about if you were not in business until late 19 or something like that. There's information in there on that as well. Real quick, tax treatment. This is all taxable. It's all taxable. Kind of side note, Karen, to this ERC credit. My stance, this is another discussion, but my stance on that, because I did have a client ask me this morning, you do not have that ERC credit until you have it in your bank. My client asked, when can I expect the 2020 and first quarter 21 ERC credit to come through and hit my bank? I'm trying to do some cash planning. I said, realistically, end of year. Do not, I read a report just last night that there is one, I think it's Kansas IRS location, has 19 million tax returns sitting in semi trucks in the parking lot. So IRS is so dysfunctional. They're so archaic. Their systems can't handle this. Even e-file tax returns are super backlogged because they're sitting in a warehouse, a digital warehouse, because their servers can't handle them. And they are manually processing anything that has a COVID credit on it, whether it's a payroll tax return or a lot of individual tax returns. And 2021 filing is going to be even worse. So just a total side note. So again, don't count that ERC credit. Don't pay. I don't want to say this. The IRS is saying you've got to pay tax on it. Like you can't include those expenses on your 2020 tax return. I'm very aggressive on these approaches. We're including those expenses until that credit is received. We will then go back and file an amended 2020 tax return. I'm not telling the client to pay tax on money they've not received. I'm 100% confident they're going to get the money, but when they get it, and some of these credits are large, which create a large tax bill. So that's my stance. Another little side note from this IRS backlog. If you are an individual that is used to getting a refund, you need to change your withholding. You need to get it to where you don't have a big refund. I know it's a great little savings account. Who knows when you're going to get it? And I'm talking for next year. Who knows when you're going to get it? If they're still processing 19 tax returns, which had no changes, they're backlogged on 20, which have a lot of changes. 2021 has even more changes because of this advanced child tax credit. There's all this reconciliation that has to go on. And right now it's manual. You cannot appreciate how much work that is. And so anyways, sorry, soapbox on that. So tax refunds are going to be very, very slow coming in. If you got money in 2020, then it must be reported as income on the 2020 tax return and your expenses as normally would. Yes and no. So these funds were mostly received in 20. That is yes. This is grant money. You're going to report it as taxable income. You're not going to adjust your expenses. I hesitated because on that ERC credit, the way it's technically written, the credit is not taxable income, but the expenses that you got credited for are not to be included as expenses. And I know I have some CPAs listening, and I want to make sure I state it right. So if somebody to try to call me out, you can call me out all you want, I don't care. But I like to speak in layman terms and not confuse people. And so we're just reporting even ERC credits or PPP forgiveness is a really good example. When you get the forgiveness, that's taxable income, but that's not how the law is written. Basically, you just can't deduct the expenses. And so that's how we're dealing with that. So cost report. There is a special line on the cost report for you to report your, it's called COVID PHE, COVID Public Health Emergency. And that's where you report all of your funding goes there. You don't adjust your expenses at all. If you are a Texas waiver provider and you did a Medicaid stairs cost report, they want your expenses reduced. I kind of argue with that answer as well. So, and yeah, Franklin, your PRF money, yes, it goes on, it's cash. Most people are cash basis. You're going to pay tax on that in 2020. I'm sorry, it's going to go on your 2020 tax return. You're going to owe taxes on it. However, one of the very top expenses on my allowable expenses is the tax due because of HHS money is an allowable expense. Then you kind of get into when did you pay it, when did you not? That might get a little messy. Like if you haven't paid the tax yet and your spending was due by June 30th, that might be a problem. I'm not sure how we're going to handle those yet. Again, don't offset your cost. I don't want to get into Medicaid stairs cost reports. I don't have the capacity for that here right now. Documentation, document everything. General ledger is not good enough. They want actual support and backup. You are required to keep it for 3 years. Now, the good thing here is that also means, which I mean, I already knew, they got 3 years to audit. If an audit doesn't happen in 3 years, you're clean, you're good to go. So long time ago in the accounting and tax world, you know, there's a statute of limits and you file a tax return, you got 3 years, and without other, and I don't remember if it was 3 years or 7 years, honestly. I don't do tax for you CPAs watching. I personally don't do tax. I don't do my own tax. They kick me out of the tax department. But at whatever date, if it was 3 years or 7 years, one of my CPA buddies posted on like April 16th of 1 year. He said, "Happy uncross your finger for tax return filed 7 years ago day." It's cracking up. File your tax return, you cross your fingers, it doesn't get audited. And after 3 or 7 years, you're good to go. You can sleep again. Anyways, that cracked me up. That was good old Pepper Horton. Supporting worksheets will be, you know, all this documentation. So before we jump into the actual portal itself and the like registering for the portal and what else is that called? The reporting and the worksheets that they've provided, and we've kind of added to a little bit. Yeah, Marcy. Yeah, 3 years even with the backlog. Now, HHS is not backlogged because they're just now starting this. IRS is super backlogged. So, but yeah, they're saying 3 years is as long as you have 3 years from reporting. So 3 years from now, I would stay on the safe side and save it probably for 5 years. Well, A, because I would put together my little packet and just file it away. So anyways, before we jump into this next session, let's go ahead and take a break. And when we come back, we'll dig into the portal. We just need, is 10 minutes good with everybody? I don't want to drag anything out, but I need a potty break real fast. So let's break and we'll be right back. So it is, where's my clock? It's 10:23. Let's be back at 10:35 and we'll get rolling. Okay, thanks guys. All right, guys. That was a little bit early. Had a little scare for a moment, the howler monkey. Usually she's good if I just let her out and then she decides she was going to go run. Sorry. That was not okay, but luckily I had to yell at her. She's in. Sorry. Okay. Again, I don't think we'll go the full 4 hours, especially at this pace. I think we're about halfway through. And secondly, I should have started off to say, hey, we don't know all the answers yet. Well, I'll never know all the answers, right? But we don't know all the answers yet. We've not been through the reporting over and over. What I plan on doing, I appreciate all of you guys, trusting me to help you learn this so you can do it yourself. But what I plan on doing is keeping this email list. If we experience things that are different than what we're putting out there now, or enhancements, or like Carlos had the problem with the reconciliation versus the summary. Like if we find things out, what I'll do is I'll send follow-ups. I'm really big on recording videos because they're so much easier than a long email. And so, but I'll send it out via email. So this will be kind of my little list. If there are updates as we go through this reporting that I feel like warrant an update to basically this presentation, I will send those out to you. So just be on the lookout there. Just know if I find something exciting or, hey, this doesn't work at all, or make sure you do this or that, whatever, I will send that out to everybody in just follow-up emails. So again, I like to always have the answers, but there's a lot of things that we just haven't been through it enough yet. And I consider, do we want to postpone this? But we were already getting so many calls that I said, we've got to get this out to everybody, and then we can do follow-up as needed. So anyways, all right, so let's jump into the actual, what you need to register with. This is where I'm going to start flipping around between the presentation and then just some PDFs. So we put together, so registration is basically providing demographic information. Everything references to report it, how it's reported on your W-9. What that means is, how does the IRS show your records? So things like Best Home Care LLC, instead of like a legal name versus your DBA name. Also, your address needs to be what's on your W-9. These are little things that are going to trip you up if they don't match exactly. You do, when you're first registering, need to have your payment information available, the amount, the date, right, Courtney? Because that's not pre-populated, is it, on registration? I think you have to provide that.
Yes, that you're correct.
Yeah. And then if you're reporting for subsidiaries, you would have their TIN, which is tax ID number. I almost said Texas ID number, tax ID number. So you want to just have all of that available. Oh, whoops. I'm on the wrong screen. Hold on. Okay. Then that's registration. So before I even move on to this, let's just pull this over here and, it does work. Okay. So we put this together again. It's going to go out in the handouts. It's not anything fabulous, but if you're us, we have to collect all this data before we can do reporting, right? So we want to see what it is from start to finish before we get in there and start working through it. So we went through, we put screenshots in here, gave you kind of some instructions on what to do. So tax ID number, business name as it appears on the W-9. That could really, if you're a sole proprietor, A, that's not a good idea, but B, if you are, that is going to have a lot of relevance there. You're going to put in the contact info. You're going to set up your username, which has to be an email address. You've got your address information. So we've made a special note here. And then you're going to, will you report on subsidiaries? So this database or this portal that you're working in is dynamic. And so if you click no, you go to one screen. If you click yes, you go to another screen. So we've tried to give you both angles of what you're going to see as you go through. So if you have subsidiaries, it wants those tax ID numbers also. Then it wants which tax ID number receives the payment, right? How was the payment made? I don't know anybody that got a live check.
And I don't think that it shows a drop down, but I don't know if there's an option actually there.
Okay.
Like, I think that it just defaults to direct deposit.
Okay. Then you got your settlement date. So what date did it hit your bank? And then the payment amount. If there were pennies, include the pennies, I think.
Yes.
Yeah. Okay. I know, because in one of the instructions talking about, I think it was about lost revenue. Anyways, it said the number can be up to 14 digits, including 2 decimals. And I'm thinking, how many zeros is that? There were some big payments. I mean, we work in the world of small providers, mom and pops that end up getting big, but big for us is 8 to 10 million, right? We work with a lot in the 1 to 5 range. And, but there are big groups. I did a big group of cost reports this year that were like 80 million. And a lot of this will make a lot more sense to them because they're not just individual operators. If there are no subsidiaries, then you just are entering your own information. You don't enter any, it's the same stuff, but not for every single subsidiary. We know this is not great to read. It's probably even harder to read on Zoom. Again, that's why we sent it out. And on a PDF, you can, I can't get to let me move this bar over here. I can kind of zoom in a little bit better. Tax ID, this is all that information that it's just a summary of what you did above. So you don't really need to see it too much anyways. It'll give you a confirmation. Do you certify that it's correct? Yes. And then you're going to set up the password and everything. And then you're good. Make sure you get to this page and then you're good. Courtney, what does it use for your MFA? So when you're logging in and it wants a code, is that
Your
going to
email address?
It goes to the email?
Yes.
Okay. So anytime you log into the portal, you're going to get emailed a code. That's multi-factor authentication. It's a security setting. And so you'll need to make sure you have access to that email address that you used. So that's it for registration. Is that simple? Highly encourage everybody to go ahead and get registered. Then what's nice is that HHS, and it actually came out in the email that HRSA sent that said, hey, the portal's open, you can go do your reporting, and here's a data entry worksheet. It was a link, and so it's an Excel file. I do have it. We'll go over it in just a moment. We added a couple things to it because I wanted it to be one complete package. You don't upload it, but it's where you go gather and input all your numbers. Then when you sit down to the portal, all you're doing is copy and paste or just entering the data, but you've already accumulated everything and calculated it and you have it all ready to go. So that's what this data entry worksheet is and what it's for. And it's good. I will say at very first, it looked a little intimidating, but it's not bad at all. And then, it only took a second for it to hit me I was like, okay, this isn't bad. So, this is the actual provider, your login. This system logs you out very quickly. Courtney experienced it over and over and over again. So that client that we were working with, we're like, sorry, remember you said you would do this favor for us? We need another code. So anyways, it will log you out quickly. That's again why it's nice to have this data entry worksheet so you can compile everything before you get in there. And then it will save your information, but I noted that when you log out, but when you log back in, then you got to click through. It doesn't like pick up where it left you off, but the data is in there, right, Courtney?
Yes.
Okay. So again, same type thing. You've got your data entry for your entity, for your subsidiaries, for your payment info. once you're in there and you enter these first couple, the payment info populates and you just verify that it's correct.
Mhm.
It asks for some tax information. This is one thing that you make sure you know. You need to know how you file your taxes. Some people say, well, everybody knows that. No, they don't. And then it also asks for the other assistance received. So this is the PPP loans. Here's exactly what they ask for: PPP loans, FEMA, CARES Act testing, local, state, tribal government funds or grants, business insurance. I had not thought about that one. And then it says other. And so business insurance, you know, some people carry a business disruption policy. And so that means if, you know, if something happened and business went down, well, for instance, like if there was a hurricane and you couldn't operate, hurricane coverage is going to cover the building, the equipment, the tangible things. Business interruption insurance covers the fact that you couldn't operate for 2 months and it pays you like 80% of your revenues or something like that. So I don't know anybody that has that in this niche or in this market, but that's what I mean by that. So then I'm just going to go through this real quick. It's very vague. And then because what I want to do is pull up the actual spreadsheet. I've got it open. And so you've got a section for infection control payment spending, for it calls it other relief fund payment spending, other PRF. That's just in general. That's what you're looking for. Then it's got this unreimbursed expenses. That is the overage, the excess, more than what you were reimbursed. And that's where I think they might do some further distributions. Who knows? And then again, everything is reported by quarter. This was mentioned previously, but we'll go into a little bit more. Again, if you're under 500,000, then you're only reporting in these two buckets. That's it. If you're over 500,000, these are the buckets that you report in. You're going to have G&A and then each of these details, and then healthcare related and each of these details. Okay. Reporting lost revenue. Again, we just, really spent a lot of time over that. If all of your money was spent on expenses, then how did that work, Courtney? If expenses used up all your funds, it still let you report lost revenue?
Yeah, no, kind of, no, not really. So if your expenses matched the funds that you received, then a screen popped up for you to report your revenue for 19 and 20. It doesn't give you the option to report lost revenue because you've already exhausted those funds that you have received based on expenses.
Okay.
In the document, in the PDF document that we provided, I did include those additional screenshots and kind of put that explanation in there. So when we're going through it, we'll see it.
Okay. And I'm also, I didn't send it this morning. I did send our two documents, but in the follow-up, I will also include HRSA, actual how-to manual. It's very thorough. Ours is a skimmed down version, but it's very thorough. So if ours isn't clear enough, you can go dig into the detail there because I think they did a good job with that. So that's why I've got this question right here. Can you report lost revenue in addition to the 100% spent on expenses? And the answer is no. So that's, hey, Courtney, make a note that let's put that answer right there. So that's super clear before we send out the follow-up.
Okay.
I don't like that answer. I think that's not necessarily fair. I wonder what would happen. Let's say you received $100,000. And let's say you have 120,000 in expenses, but you also have another 30,000 in lost revenue, legit. And I wonder if you could okay, back up. It calls it this. I wonder if right here, if you put 90,000 out of your 100, and then you so I said you had 120 in expenses, and you put 30,000 here. and then you still put lost revenue. See, these are things I don't know yet.
Right, we could play with that.
Yeah. So that'll be kind of interesting if you could trick it to get all of your spending in there, including lost revenue. I don't know. And then, so you get this financial summary that shows you payments received, lost payment summary, lost revenue summary, a reconciliation of payments received, how much was applied to expenses, how much was applied to lost revenue, and how much was unused. You don't want a number there. Okay, that means you're going to have to pay it back. There are instructions, and if you need to pay it back, that's okay, right? I mean, it's up to you. Some people are like, I just want to pay it back and not be done. I don't want to try to get creative. I don't need their money. I don't want them scrutinizing. We've seen every end of the spectrum. We've got people saying, I want every dime. They haven't increased my rates in 5 years, you know, kind of stuff. So, either way, but there is methodology. I think it's in the FAQs of how to return the money. Again, then you've got these metrics. This is like the very end of the reporting. So you're going to have to report full-time, part-time. For each of these categories, you got to report clinical versus non-clinical. So full-time, part-time, contract, furloughed, separated, and hired. This is just for statistical purposes. Patient metrics by quarter. So inpatient admits, outpatient visits, whether in person or virtual, ER department visits, number of facility. That didn't make sense when I typed it either. This is for long-term and short-term residential facilities. So I don't know if this is supposed to mean number of facilities. We'll look at it, it's on the spreadsheet. And then facility metrics by quarter, only if the provider operates like staffed beds, right? So that's going to be medical and surgical beds, critical care beds, and other beds, right? So let's get into the worksheet. Can you see the worksheet, Courtney?
Yes.
I got lucky on that, y'all. It just happened to be on that monitor. Okay, I'm at the very end. Well, you know what? While we're right here, let's look at this. It said number of facility. I don't know what that means, Courtney. So we'll look that up.
But yeah, I don't remember seeing an area where you had to report the number of facilities. You just have to answer if the facility has staffed beds.
Maybe that's what it is. And if this is yes, or it has a number, it opens these questions. It could be one of those things. Like we said, it's dynamic. So as you answer things, it'll open the right pages. Right. So again, this was a little overwhelming, right? When you get in, you're like, whoa. That's what I thought when I first opened it. We only added entity information, subsidiary question, payment, yes. And did we add this one?
Yes.
Okay.
And that's it. Just those four.
Okay. So actually, well, yeah, because there's, you can tell because theirs don't have any grids on their page. I like my grids. So anyways, it provides you with some very, very brief instructions, but it highlights, hey, this is the reporting period. And so somebody asked for this a little earlier. Here's the reporting periods. If you received your payment here, your reporting timetable is right, it's right now. If you received money in the second half of December, then you're going to report in January first quarter, because that's giving you from December 31st, 2020, a full year to 2021, December 2021, to spend it all, which isn't here, but I know that. So you've got a full 12 months. But if you received it in July, you've got like 18 months, right? And it gets reported first quarter of 22. But now here's the kicker to me, is this last one. Payments, period 4 is payments from July 1 to December 31st. So that's just now. And then that's not going to be reported until first quarter 23. Like, I just want it to go away. It's like it's never ending. But anyways, this is highlighted because that's the period we're on right now. So again, this is it's going to be in your follow-up email. It is just here to facilitate filling out the portal. It is a replication of what is in the portal. We do not have the ability to log into the portal and show you what it looks like at all. I'm sorry, I'm a nobody to HHS. So, I don't even know if any of the bigger guys were able to get that kind of access, but we were able to go in as a client and duplicate all of this. And we just, like I said, we just piggybacked off of what CMS or HHS was already putting out there. So this was already started, but I said, let's put this whole thing together, especially when we learned how quick it was timing out. We said, okay, we need all of this filled out before we sat down to start keying it in. So again, this is the information we already went over, really simple. I feel like we should make it bigger font, but that's okay. I also got over myself of trying to make it pretty. It is what it is. It's a working file. It's an Excel file. So it's as pretty as I'm making it. Subsidiary questionnaire. Ask, do you have any yada, yada. If you have, number 2, did you acquire or divest any subsidiaries that are eligible healthcare providers and received funds? Then you've got to fill out this bottom part. What was acquired or divested? I don't know, is this supposed to be a date?
No, if it was acquired or divested.
I gotcha. Okay. And then the date, who acquired it, who
Yeah.
the other parties, where did it go to,
Mhm.
kind of thing. Percentage of owner, do you still have a controlling interest, that kind of information. And then if you have subsidiaries, then you would fill out this part of just what is that? Yeah. Okay. Again, let me show you real quick. Oh, those are FAQs. Let's see. Okay, real quick, just so you can see it. This is the actual HRSA manual. It's 73 pages long. It gets into more of that step by step. So we're facilitating, like, I don't want to say the basic stuff, but there is much deeper. I saw no point in me trying to rebrand this or make it my own. It is what it is, right? So this gets into, like, here, let's go to this subsidiary questionnaire. It gets much deeper. Now I will say these little blue links will start taking you in circles because I experienced that last night. So it gets, and it also has the screenshots, but it gets into far more detail than what's on the spreadsheet. So, all right, let me put this back over here. Trying to keep my stuff organized. Okay, cool. And so, all right, payments to recipients. Again, this is going to populate once you're in the system. However, you want to make sure it's right. Don't just accept what they say. Make sure you're reporting on the right things. So get your data all compiled together, set it up, make sure you got, I know we keep saying this, make sure you're reporting the right TIN number with the right payments. Those things are going to matter. Now, another thing, and I'm not sure how you're going to calculate this. Anyways, they want to know the interest earned on your money. And I think the only way you would really be able to do that is if you set that money aside in a savings account somewhere, right? But they want to know what it is. And if you have to pay it back, you have to pay back the interest earned on it as well. So be prepared for that. Again, tax information. So this tax classification, we went in here to try to help out so you don't, so you know exactly what the options are that they give you. So we've kind of programmed this, and y'all, we don't have this locked down. If you go deleting cells and stuff, you're gonna mess it up. So just kind of be careful with it. And don't mess up all the formulas, because these formulas are tied somewhere else to give you these drop downs, right? Courtney and I were very proud of our Excel skills yesterday. We were looking stuff up. YouTube is incredible if you need Excel assistance. Anyways, so there are many of these have drop downs that will help you select. And so federal tax classification, here's something that stumps people. You don't see LLC on here. LLC is the anomaly that they don't know what their identification is. They don't know what they identify as. And so they either identify as a partnership, a S Corp, or a C Corp. They're a chameleon, although they can't just change from one to the other. So when an LLC is formed, it basically defaults, and you could be a single member LLC, which then depends on the owner, that one single member. If it's an individual, then you're a disregarded entity, which would go under other here. But typically, if you've got 2 members or more, you just form an LLC, it's going to default to a partnership. But then you can make an election to be taxed as an S Corp or even a C Corp. So that's what it wants to know. So what you want to know is go to your tax return. What kind of tax return do you file? Courtney, could we update this pick list to then, after C Corp, put in parentheses tax form 1120, tax form 1120S? So if somebody were to just pull their tax form and they're like, I filed an 1120S, what does that make me?
Yes, I can do that.
Okay, cool. That'll be identified on that so that you know, because it kind of says on the federal tax forms, but it's not very clear. So that'll help. So C Corp is an 1120, S Corp is 1120S, partnership is 1065, trust estate is a 1041. We don't do any of those. Other would be if you file as a Schedule C on your personal tax return because you're a single member LLC or a sole proprietor. That's I think what would go under other. And then I guess you could be exempt. So a 990 would also fall under that if you're tax exempt. We do have this exempt payee code.
Oh, I'll have to claim that, and that's weird.
So
the exempt payee code and the exempt from the foreign tax doesn't apply to everyone. And so it's not required when you're completing your reporting, but I just wanted to provide it here so everyone could see that. Some of our clients do qualify and some of them don't. And if you are exempt, you know.
Okay. And then it's also asking for your fiscal year end. That's going to be a month year end. Like what month does your fiscal year end? There's no year associated with it. Okay, single audit information. We did not discuss this in the regular presentation. If you received over 750, recipients that expend. So if you received and then, spent over $750,000 in federal funds during your fiscal year, then you're subject to this single audit requirement. If you're subject, you probably already know that. It is in aggregate, so it's PRF funds and any other federal financial assistance. So FEMA, federal grants, if there were any. I don't think it includes PPP loans, although I'm not certain on that. We don't do audits. We're not an audit firm. So what I would say, if you received I know it doesn't include PPP loans because we had people well over that with PPP loans at HHS and they don't qualify. So I did look that up at some point. So again, this is more of these like grants from the federal government. You need to be aware of that and make sure that you follow those rules, and you may never have had to do that before. It really applies to a lot of nonprofits that get grants. And a single audit is some kind of governmental audit that the government requires. I've never done that side of audit, so it's about where my limit is. If any of you CPAs know better than I do, feel free to share. Real quick, I got a couple questions over here. Whoops, let me scroll that back up. Let's see. I tried to register in the portal early this year, but I received an error. I received 2 payments, one in April and one in June. Do I add those 2 payments together and enter combined amounts? So yeah, I think the portal was having issues early on. It appears to be good to go. I think people are registering and it's pretty working pretty well now, so you should be good. 2 payments, April and June. You're going to report, they are all going to go in this reporting because it's June, you got it before June 30th, 2020. Don't add them together. You're going to list them separately because they have separate dates and amounts. So back here in this payments section, you're going to report each one. And on this distribution, general distribution or targeted, I think is what it's asking for there. Amount deposited, amount returned. If you returned any of it, they want to know how much you returned, how much was kept, and what date did you sign your attestation. Courtney, is this the part that populates once they get in there?
Yes, so they're at this screen, when they're in the reporting, there's actually an Excel document that they can download that actually has this information to confirm.
But it populates with their info.
Yeah, if I remember correctly, yes, that like this pre-populates. And it'll say the tax ID number, the distribution type. So if like it was just a general distribution or targeted distribution, and then the amount deposited and the attestation date. I do believe that all of those, yes, do populate.
Okay. So you don't have to worry about what date did I sign that attestation or not. So that'll all populate in there. So that answers that question. Let me see. Do we need to report PPE donations received from the RAC under other assistance received? I don't think it would hurt anything. I don't know if it's required. So that's not a very clear answer. I know what you're talking about. If you were able to quantify that I received $5,000 of PPE that came from the RAC that was in my area, I don't think it would hurt to report that. I'm not sure if it's required, and it might be deeper in those deeper instructions over there. So that's a good one. Courtney, can you write that down that we need to answer that? Because yes. I know we've got a few providers that have that too. Oh yes, Frank, can you report a blend of lost revenues and expenses? Yes, it's not one or the other, it's both. It is both. End of May, we asked for PPP forgiveness through the bank who financed us. We still haven't gotten any response. Do we still need to file through the HHS portal? Well, those are 2 different things. So PPP is one thing. If you received this Provider Relief Fund, and it's $10,000 or more, yes, you still have to do the reporting. If you only got a PPP loan, none of this applies to you. So I'm not sure if I might be confused on that in some way. Okay. Okay, I think that clears up our questions. Okay. So again, they're going to ask for this interest earned, these tax classifications, single audit, other assistance received. This is actually their form. So let's see what it says down here. So this note to rural health clinic, COVID testing, This will pre-populate these if you got this. Okay, so it's grayed out, so you don't have to go digging or enter anything.
Mhm.
This area is going to be for PPP loan, Treasury, SBA, so it's your PPP loan. This is FEMA. So if you've got any assistance from FEMA, and what I'm kind of wondering is, I wonder if those racks fall under FEMA. I'm not sure. HHS CARES Act testing, again, if you did that, you know you did it. This is local, state, and tribal governments. So this is like a lot of counties did little business grants. I mean, they weren't a lot, but that's what this is referring to. And then business insurance we discussed, and then other. It doesn't really give us any detail of what other assistance would be and if that would be those rack distributions. I'm a little bit hesitant because that was goods that you were provided and not money that you then needed to spend appropriately. Unless I see somewhere where it says you do need to report that, I think I'm leaning towards the not reported side. Do I report PPP amount received and HHS Provider Relief Fund? You only report your PPP money on this grouping right here. It does not go over here with payments to recipients. This is only for PRF payments. And again, this is going to pre-populate. I just recommend you have it all here so when it does populate, you can verify that it's correct. So, so let's make sure we all have that clear. Idle grant. I think yes to idle grant. That came from SBA, so I would put it in this box. I would say no to idle loan. So remember you could have got or received $1,000 up to $10,000 last spring from SBA. Then if you wanted to, you could then go apply for a loan. Last year was 150,000. They then came out and upped it to a total of 500,000. So you could apply for the additional 350 to get you to a total of 500,000. If it's a straight loan, I don't think you report that here. That's my opinion. I don't think you report that here. I need to read those rules a little bit. Courtney, will you note that one too?
Yes.
Do I have to report the idle grant with the people? Okay, just answered that one. Hi, say we have one. Oh, that's the old question. Okay, hang on. Okay, I think we're good on questions. Okay. Infection control payments. So this was a targeted distribution. This is applicable to nursing homes. This is where you will report this specific kind of payment received. This is, if you recall, if you received less than 500,000, this is how you're reporting. This is exactly what it looks like. You've got A&G expenses, you got healthcare expenses. That's as much detail as you put in there. And you do it quarter by quarter. If you're over 500,000, then you've got to break it down a little bit further into these buckets. And again, quarter by quarter. I don't think this should be a challenge. You already segregate these kind of expenses. So I don't think that's that hard. Is that in total received? Yes. My concern is it's in total received during that period, that reporting period. So right now we're reporting on the period from April 10th, 2020 through 6/30/2020. The way I read this is if it's over 500,000 during that period. Again, aggregate. Now it is aggregate. So if you received, like somebody reported they got a payment in April and in June, it's in aggregate. It's not just one payment more than 500,000. What I would say is be prepared to report like this. And then if only this shows up, you're good to go, right? Just have your total for each section. Other PRF payments. So this is going to be just like general distributions. This needs to be opened up a little bit. Okay. This one piece that they keep really hounding on, let me move my little Zoom camera thingy. Not reimbursed and not obligated to be reimbursed by another source. If, and I doubt this, anybody on this call is this, if you are in a cost reimbursed model payment system, you might have some challenges with that. Because if your cost of delivering services went up and you get reimbursed your cost, then essentially you can't use HHS money to cover that because somebody else is obligated to cover those expenses. Now, if you were to bump up against a cap, so when you're on cost reimbursement, you've got your cost and you've got your cap. And if your actual costs bump up to that cap, you only get paid up to your cap and not anymore. So if your cost exceeded and your cost went up to your cap and then exceeded your cap, maybe those expenses could then apply to HHS because that other program is not obligated to reimburse for those. But I highlight that because they keep reiterating that statement over and over and over. This is where it said 14 digits. I'm like, how many millions or how much is that? It's a lot. Again, by quarter, same exact, it's the same screen. It's just, these are regular general distribution payments. They just want infection control separated. This is everything else. Mm-hmm. Then this is that other tab that I found very, very interesting. They only give it to you in the summary form, which is great. But what unreimbursed expenses did you have? Where did you spend more than what was allotted to you or paid, sent to you? I think everybody should do this. We've been working with a lot of people and it's some people really were not affected. I don't know if it's the area that they were in, didn't have a huge outbreak, or that they did a lot of good communication and brand awareness about safety and the infection control practices they were putting into place. I don't know what the differences are. Some didn't really get hurt very bad by it. And if that's you, awesome, kudos to you. There are others that were really hurt badly by it. And so you want to make sure that you may have got hurt a lot worse. And if the government's offering to kind of make you whole again, you take them up on that, right? Think about the survivalhood of your business, right? I would go through the extra work to get these expenses if they exist. I wouldn't go make them up, but if they exist, because we don't know when they might send out another relief payment. Let's see. Now,
before we move forward, Marcy has a question. It says, would COVID bonuses be reporting in the G&A or healthcare? She said, I asked this because nursing staff is healthcare, but payroll in general is G&A.
So yeah, I don't agree with their breakdown of G&A versus healthcare related, but I don't think it matters. I say you put it on the personnel line, which actually falls under G&A. Even direct care, I would never call direct care G&A, but because they have it lined out this way, I would report it there. I'm going to follow their exact outline here. And then Other healthcare expenses to me would be like DME, equipment, medical supply. Well, you've got supplies. Telehealth, well, I would probably put that under technology. You know what might be kind of nice, Courtney, not to create more work for ourselves, but if we took one of our standard chart of accounts and like did a grouping schedule to map it to these, like this is how we're gonna categorize them. That might be nice to be able to have. But I mean, again, it all goes in there. I don't think anything's going to be overly. Marcy loves that idea. Okay, we'll get that done. We actually have software that does that for us. We do it for the cost report all the time. So, and I'll do that to say how we're going to group those together. And then what I would do is make sure that, and you can just do it in Excel, right? It's like, here's my chart of accounts or my trial balance in Excel. And then you can put another, here's the grouping I'm going to put it in. But what I would do is I would keep that with your work papers, with your documentation, so that when you have this other G&A, you can trace back to what all was included in other G&A. This becomes critical in an audit. They call that a crosswalk. So the auditors want to see a crosswalk that go from your trial balance to this report right here. I want to see, I don't want to have to go figure out, okay, you put $400,000 right here. What all numbers add up to that exact? You don't want them to have to do that much work. So that's a lead schedule. So we've got a few more questions popping in. Let's see. If we haven't used our PRF funds, will we be able to issue hazard pay bonuses now before reporting is closed? It depends on my first answer is no. If you received this money prior to 6/30 of 2020, you were required to spend it by 6/30/21. If you are a true accrual basis and you keep accrual basis financials, you can demonstrate that you do that, and you were to accrue a bonus at 6/30 and pay it out like ASAP, like today or tomorrow, because that's like a 2-week lag. Like a lot of people, if the pay period ended on the 30th, they are getting paid on the 15th. Not everybody, but in general, you might could slide that in and it be accepted. If your cash basis, no way. It needed to have been spent on 6/30. Now, if you received additional distributions after 6/30, then absolutely that money can still be used and still be spent. But yeah, there was a deadline of 6/30. We sent out a couple of blasts about that, trying to remind everybody to spend. Okay, our GL insurance nearly tripled now 2 years in a row. What a great question. Sue, I think that's one I would include. If you don't need it on this page, I would definitely put it on this unreimbursed, because I definitely think, and now that's one I would put a narrative. It doesn't need to be a book, but a short thing. And I would even ask for, you might talk to your broker and say, hey, can you tell me why my costs have tripled? And if they'll give you a statement, include that. That's where I really get into all this reporting. Like, you could get really thorough with your documentation. And that's a great example of how. All right, so then you run into, this is that worksheet that is not necessarily talking about lost revenue. They just want to see actual revenue 19, actual revenue 20 for everybody. Correct, Courtney?
That's correct.
Everybody. Because Courtney and I are like, hey, there are other methods to calculate lost revenue. Well, we had to get past that screen and then we found it. So this is just your actual patient care revenues, calendar year. That's a really good point here. The reason they're doing this quarter by quarter or in quarterly chunks, they recognize a lot of people have different fiscal year in. Most different fiscal year ends do fall on a quarter end, not all of them, but many do. I had a client one time, they had a 1/31 year end. Did not for the life of me understand why and why they wouldn't let us change it regardless. Anyways, if you have a different year end, everything here is talking about calendar year, calendar quarters. So really you're going to have to adjust your books accordingly. So then once you fill that out, then you get into the lost revenue options, and it gets detailed as to, okay, here's the, if you see, this gives each of your payer sources. That's what's going down the rows. And then the columns are just your actuals quarter by quarter, all the way from 19 through 21. Let's see. I do think this will only open if you did not report enough expenses to use up all your money. If any of these are zero, then you need to put zero in those fields. See, and they did a really good job of putting these notes on here. So you figure that out before you get in there and start doing the reporting. So there's your option one. Again, that's just going to be actual, 2020 actual versus 2019 actual. Here's your option two. This is your 2020 budgeted. And again, it's comparing your, and we'll fix this in my earlier stuff. It is comparing your 2020 budget versus 2020 actual. You're going to have to upload the actual budget itself and an attestation saying it was in place before March 27th. And the budget itself needs to also be signed. So print the budget, sign it, print an attestation, sign it, upload both of those. And then again, it's the same, well, it's not the same. It's the same payers going down the side. And then you're looking at, all right, here's my budget. Here's my actual 2021 budget versus 21 actual. Okay. So we didn't even expand it on through 21, but that is what it's looking at on this budgeted approach. If you're using the budget for lost revenues. The last option is that alternate reasonable methodology. It looks very simplistic. You're just going to calculate what it was for each quarter and report it. If in quarter, and what happened around here and with a lot of our clients, they didn't really see a big hit in second quarter. It really started in third quarter. And a lot of them are cash basis, right? So that was revenue from the prior months flowing in, but then it really hit in July is when it hit. So if first quarter was up, no matter what your methodology is, second quarter's up, those would be zeros. Don't put any increase in revenue. You're only reporting lost revenue. And I'm sure they need to be, if there's no lost revenue for a quarter or there is an increase, the entity must report a zero. So just be real careful there that you're not doing plus 10,000, minus 32,000. You're only reporting the losses. Anything else is a zero. And then here's the narrative. I honestly wouldn't worry about trying to type this into Excel. You're going to be able to, if I'm not mistaken, Courtney, they can upload their narrative, right?
Yes.
Okay, I think you're going to upload that. It even tells you like what kind of documents are accepted. They're accepting Word docs, PDFs, Excel. It depends on which item you're uploading, but for the most part, you're good with PDF and Word documents. And then Excel, where it's asking for various calculations. Last but not least is this personnel, patient, and facility reporting that we kind of looked at because that's where I landed when I first opened it. Again, clinical versus non-clinical. And you need full-time, part-time, contractor, furloughed, separated, hired. Separated is going to be terminated too, right? That's right, that's
yes,
terminated.
that were terminated or quit.
Or
that
quit.
is included in there.
Yeah. And again, you're going from Q1 19 to Q2 21. I'm trying to be very careful and state the right dates. I know it gets confusing when people misspeak, so trying not to do that. Patient metrics, and then these facility metrics if you actually have staffed beds. That's the end of the workbook. So
I have an
yep.
update on the number of facility under the patient metrics. So that is defined as the number of stays, defined as unique admissions for patients residing in a long-term or short-term care or treatment facility.
Okay, is that in that instruction manual?
Yes, that's in the HHS reporter, the user guide, the 73-page document, that's in there.
Okay, great. So that's where, I don't know, I still don't, number of stays, like they worded that strangely, but.
Right, so the number of stays for patients residing in a long-term or short-term care or treatment facility.
Okay. All right, well, there's that. We do have some more questions. On contractor, are we talking about contract individuals, not contract companies? Yeah, I would go that way, Marcy. I'm thinking 1099 contracted individuals and not like your therapy company. That's how I would interpret that. Let's see. Oh, that's okay. I finally figured out why sometimes they jump to the top, and it's because somebody gave it a thumbs up. That's why I keep getting confused. I'm like, wait a minute. So that one's done. I may have missed your comments, but is the first option is comparing total actual revenue only? So if you have less actual revenue in 2 quarters, you would use option 3. Let's go back. I know what you're asking. No, it is still quarter by quarter. So the question is on actual revenue. When you're reporting actuals, it is quarter by quarter. So if some quarters were up, you report a 0. If they were down, but actually you don't even report that. You're on this form, you just report your actual revenue numbers, and then the system will do the math for you to say whether it was an up quarter or a down quarter. And if it was an up quarter, it will calculate it as 0. If it's a down quarter, it'll calculate it as lost revenue. So that is quarter by quarter. You may have seen this page right here where it's just total for the whole year. That is just kind of a demographic that they are collecting. That has no impact on lost revenue.
Right, and to speak to this page, this will only show up if the recipient has actually used all of their funds for and just general expenses.
Oh, so if you're going to report lost revenue, you don't even get to this screen.
Correct.
See, and these are in order. So HHS said a while back, no, you got to report expenses first and then lost revenue. And that's exactly how the flow works. You go through and you report your expenses, and then it's like, okay, you haven't spent it all. Let me give you lost revenue options. Or it says, okay, you spent everything, way to go. Hey, by the way, how much were your revenues for 19 and 20? And then it doesn't even give you the lost revenue options. And that's why I think if you overspend, if you've got enough expenses to capture all of your payment, justify all of your payment, and you have lost revenues, I'm going to look at tricking the system. I kind of think, okay, again, the example I used, let's say you received 100,000 in money, you got 120 in legitimate expenses, and you got 20 in lost revenue. If you go report your 120 in legitimate expenses, you're not going to get to the lost revenue screen. So I wonder, could you report, and I'll show you what screen I'm talking about. So on this other PRF payments, report 90. Remember, you got 100. Maybe if you report 90 here, then you come to this unreimbursed and report the other 30. It may not work. I may be trying to trick somebody. They may already have outsmarted me, but it's always fun to try. Then, because this did not use up all your money, then you should get the lost revenue options. We don't know. We'll play with it. And that'll be one of those updates. If it's something exciting, I'll send it out. So that's kind of a thought there. So I hope I answered that. So Raul, personnel patient facility tab, is everyone required to fill that out? Or does it only apply to facilities? So the personnel and patient metrics, you got to fill all that out. If you don't have a facility, then this won't show up. These beds and stuff won't show up. This would be 0 or NA. If you're a home care hospice listening, you're not going to have any emergency department visits. You're going to live in this one right here. And this is inpatient admissions. Remember, you've got hospitals doing this, lots and lots of provider types. So your world is really going to be right here for that metric. Outpatient visits, in-person and telehealth.
Yes, and on the section about the facility metrics, there's a drop-down question for that section, and it says, does the reporting entity or subsidiary operate or support staffed beds? So if you answer no to that question, none of that third little section is going to show up. But if you answer yes, then you will need to complete the facility metrics section.
Perfect. Frank, yeah, that's kind of my stance, what you said. So I'm saying report most of it on expenses and then lost revenue to get it all in if you can. I don't know if that's going to work, but we'll see. We'll see how that works out. My thought is you want to get it all in there. You know, and some some actuary is going to dig through all this data and they're going to put it together, and there's going to be, you know, some kind of publication in 2 years that shows the financial impact to the healthcare delivery system of the pandemic, right? So I'm sure that's why they're collecting some of this as well. I want it all in there. Okay, so that's that. Again, let me pull over, let's see. Provider Relief Fund, oh, FAQs. I'm trying to read I think if I look higher, I'll be able to see it better, which is not the case. Sorry, that one didn't come over. Again, this is the super detailed one. No, this is ours. I'm gonna pull them both over. I should have just pulled the whole thing over. Okay, this is our document. Again, we don't put our brand on it or anything, but it kind of goes through. This is our little skimmed down version. 13 pages is the smaller one, is ours. I'll walk you through, but this is the one that gets really detailed when you get to a step that it's like, what's that mean? Also, I will really note, because it was very helpful to me, look at all your footnotes. Your footnotes will explain a lot of terms, and you know, it'll reference. So this says 5, and so you want to go see, okay, where does it? Here's 5. So divestitures during the period of performance. And so it kind of defines what all that means. The other really, really good document that you're all going to want to have handy, or at least have online, is the CARES Act frequently asked questions. It is kind of sorted out what's, you know, it's like in order. It's 60 pages. What's really nice about it is they've done a great job at putting this date, modified or added. And so like when I go through it, I was looking for anything added in 2021 because I'd gone through everything from last year. And so I wanted to see anything new that was added or modified. And so it answers a tremendous amount of questions, and they get really specific. Let's see when it gets to, I kind of asked this. So they're supposed to issue 1099s on this information, on these payments. And you know, Courtney and I were saying, we don't think we saw any 1099s come in for these payments. I'm not sure. Anyways, and it just goes through the attestation. There's lots of, you know, rejecting the payments, the terms and conditions. deadline to use the funds, somebody was asking about. So if you get a payment latter half of this year, you got until December of next year to use it. Let's see, I had some stuff highlighted for myself. There are lots in here about change of ownership, but also about subsidiaries and affiliates and how that's all related. So that is really handy to have. Oh, one thing on, let me see, I think I put it at the very end. Courtney, there was one place, okay, resources. I put on, here's the phone number for, and the hours of operations, 7 a.m. to 10 p.m. Central Time, Monday through Friday. That's the support line for this reporting. There was somewhere, Courtney, that it said if this is not, whatever it populates is not accurate, do not proceed.
Yeah, keep scrolling up. You highlighted that in yellow as well.
Okay.
So yes, there is a screen that will pop up for you to confirm payment or the funds. Maybe we didn't highlight it. Yeah, there we go. So the screen above, like, so sorry.
I think it's this one right here.
So this screen right here will populate for you to review and confirm like the amounts that you received. And then at the bottom, you are certifying that this information is correct. So you can click no, and then a box will pop up for you to put your comments, but that does not, that really isn't accepted as you saying like, no, this isn't wrong, or no, this isn't right, sorry. It's really there for you just to put your comment. The note that Amy and I added above was you need to say no, save and exit this, and then call the 1-800 number and speak with them and let them know that this is not correct. Because there's a whole process that you're gonna have to go through to get that corrected.
Yeah. And there have been, errors made. So don't just assume that it's right by any means. Yeah. Another note on that is I would really encourage you to start the reporting now or sooner rather than later. Don't wait till, September 28th to try to get it in, because you don't know what you're going to run into. Mm-hmm. I heard another peer of mine speaking, and he said, do it now based on the rules as they are, because every change that has been made has gotten less and less favorable to the providers, right? So it's like, file now while we know what it is before it changes again. I don't know if I 100% buy into that, but I did want to point that out, that there is this part. If it's not correct, stop, save it, and call support. Let's see, what other resources did we have? Let me go back to the presentation. Okay. Again, website, the FAQs, we're here for full reporting services, although space is getting a little limited. We'll probably stop taking new clients on that pretty soon. We will hit that pretty heavy in August. Right now Courtney and I are going on vacation, not together. She sees enough of me. This morning too, I'm not usually here this early, and she's got the office to herself. It's real quiet. And I just kind of bebopping in, and I'm thinking to myself, I know she enjoys when I'm not here this early in the day. It's because she's like super zero focused on stuff, and I'm just noisy. Anyways, we're going to hit it. So then when we get back, we'll start gathering all the data. That's, we got to go through and gather it all and basically set up our internal processes. Now, everything we've showed you, like this Excel workbook, those are going to be our internal processes. That's what we're going to use to do the reporting. We will probably end up doing close to 50 reports or so. I don't know how many we end up doing, but lastly, and I don't really have a presentation slide on it, is I just have questions. I like this little guy, but is, you know, again, just kind of reiterating what this audit packet is going to look like. And, you know, I envision ours, you know, having we call it prepare notes, but I'm not sure that we actually do that, but some kind of a cover sheet, right? That is, and maybe it's demographic info. Client received this much. These are the dates. This is the total spent on expenses, total spent on lost revenue, additional expenses included, et cetera, whatever it is, like some kind of little summary. But we're going to have, you know, we're going to need the trial balance. We're going to have that crosswalk to show it over to how we're grouping it and reporting it on the worksheet. So that math is all tied together. We're going to have what we call, again, a lead schedule that says, okay, these are the reports or the numbers we reported. By the way, go see Exhibit A for all of the technology expense invoices. Go see Exhibit B for the additional payroll expenses that were included. Go see Exhibit C, all of that. We're going to have everything in there, right? It's all going to be there. We do PDF. We don't do real paper, but it'll all be in a PDF. We'll have highlights, we'll have annotations, notes all over it. And then we're going to file that away. It's going to include any attestations that we need. It will probably include a summary attestation that is like, kind of like that summary, like client spent most funds on expenses and, you know, used option 1 for lost revenue. Therefore, there is no further attestations needed, something like that. I kind of envision that summary page having clients sign off on it in some way that we all, you know, this was prepared and ready for audit. And then literally we have all those invoices. And if we have alternate method of counting lost revenue, we have the schedules that go with that, the Excel summary. I don't have a template. I don't have a template to share. Every case is going to be unique on that. And so you're just going to have to create something to summarize it. And again, try to make it to where your 7-year-old can understand it. When I say they're not accountants, I'm serious. As a matter of fact, and now that I've done it once, I get emailed a lot from LinkedIn. For years, LinkedIn has never approached me with, hey, here's a good job. Well, there was one and it caught my eye, and it was Texas Health and Human Services was hiring an accounting director, and there was no accounting degree required. I read it 18 times. It was like, I went through, I said, how is that? But that's what you're working with. Anyways, okay. Let's see. Raul, I'm assuming once you submit the PRF reporting, it will not give you the option to go back and make any changes, corrections. At least that's the approach I'm taking. I would take the exact same approach. Yeah, I think once it's submitted, it's submitted. Mm-hmm. Yeah, I don't think that there would be a way to go back and make any changes. All right, guys, that is really all I've got. We don't have any more questions. I do have more resources. You all pretty much know how to get a hold of me. If you want to stay up to date, again, this recording, it will be on YouTube. It'll be unlisted, so you can't find it without a link. You guys will all get the link. But YouTube is a great way to keep up with us on any of these things that develop, that change. If there's a, if, for instance, like I said on that, which I haven't done one, but I'm thinking about, like I said to personal individuals, if you're used to getting a good big tax refund, you might heavily consider changing your withholding status and your withholding right now so that you're getting that money in your paycheck instead of a big refund. Those are the type of messages that I will record and send them out to our audience, but they live on YouTube and it's all public. If you want more information, if you want to dig deeper into some ideas on this lost revenue using an alternative method, go look on YouTube for our webcast back in late July. I feel like it was like July 27th or something, and last year. And it was HHS Provider Relief Fund update. And it was with Alaya Care. So it's co-branded. And I'm sorry, I'm not more exact than that. Oh my God, I have 34 emails. And I kind of operate on a not zero inbox, but close to it. I'm not going there yet. I was going to YouTube. But all of that's there. That session, we spent half of the time on lost revenue. Now, please understand, when we did that, there was no talk of if you use an alternative method, you've got a higher risk of audit. You need to be super specific. It has to be basically approved. If HHS doesn't approve of it, they're going to kick it back. So we were throwing out every idea out there. So I think you want to kind of be a little bit careful about that. I was going to try to go to and see if I really need to bookmark that actual webinar. Anyways, you guys can find it if you need it. If you can't find it, let me know. I'll find it for you. Anyways, any more questions as I just closed the Q&A panel? Will you be sending a list? Oh, yes, thank you. List of allowable expenses. Let me pull that up real quick. Thank you. I felt like there was one more thing. Okay, like I said, it is still in Word format because I want to add to it. Nobody gave me any really good ideas today. I'm a little surprised. I put this taxes right up front, but that is one that they came out with. So let's just go through these. And again, I try to put this kind of disclaimer. This is not a full list. It's not an exhaustive list. It's not an inclusive list. There might be other things, but it also doesn't mean that everything on this list is legit. You've got to make it make sense for you, okay? Now, these first ones, PPE, cleaning supplies, totally legit. There's no explanation to be made. COVID testing, screening, and reporting, absolutely legit. Those qualify for everybody. Now, infection control programs, think about professional fees. So this list is there to, yes, I will be sharing the spreadsheet, will come out as well. I didn't send it yet because I wanted to make sure we didn't have any edits to it. So we will send that as well, Lisa. This idea is to spark thought. That's what it's for. It's to give you some ideas to start thinking and get you thinking in that way. So infection control programs. Nursing homes, you already have infection control programs in place, but did you have to step it up? So what about professional fees that you had to pay? Think about professional fees in a whole. Consultants that you've had to hire to help you with compliance, accountants that you've had to hire with all this reporting. Reporting for your PPP loan is HHS allowed because that wouldn't have happened without COVID. And even though it was on PPP, it's still COVID related. So all those, any extra fees that you paid for COVID consulting, PPP consulting, attorneys, accountants, your healthcare consultants, JCC Healthcare Consult Link, any of those, any education that you had to take, this, right? That all can count. Changes made to your actual physical facilities. Did you bring in plexiglass? Did you separate offices? Did you put up partitions? Did you buy cubicles to kind of partition things off? Yes, PPP application prepared by your accountant would be an expense for PRF. Then you can go to, and then also like third-party vendors. If you had to bring in a third-party facility sanitizer, that could be an office facility, right? You still had to protect not just your clinical staff out in the field for you home care hospices, but also your administrative staff in the office, right? Hardware with regards to telehealth remote employees. I know I personally had to buy a few new laptops. We're very virtual, but I'm funny with, I like having a desktop instead of laptop. I don't know, go figure. Laptops, monitors, like full setups for work from home staff. Software cost associated with all of that. Zoom. I wish I'd have bought stock in Zoom before all this went down. I mean, through the roof. I know my subscription went from free to 500 a month or something, right? All because of COVID. Skype, does anybody use Skype anymore? Okay. But GoToMeeting, WebEx, any kind of VPN, any kind of IT services to help you facilitate all this, any IT services to say, oh my gosh, we're on QuickBooks Desktop and we have 300 employees that we pay through QuickBooks Desktop. I need that on a remote server environment, right? Anything like that. Additional licenses that had to be purchased so people could use things at home. Subscription services, security, started email, encrypting your email much better. This is a biggie, improved internet capabilities. So did you go to fiber? I know our bandwidth went up. I like this one as well, on-call and triage services. So maybe you didn't use an on-call service before or a triage service and you got inundated because let's say that you're small and the administrator and DON handled it. Well, now the administrator and DON are covered up in compliance and learning how to don and doff their PPE, and they didn't have time to do on-call and triage. And so you hired a service. To me, that's legit. That happened because of COVID. It's clearly to deliver care, and it's because of COVID. So to me, that's super simple. Subscription services, oh, that's where I just was. Labor costs, okay? This is what I feel like we've kind of hammered. It can even be for contract staff. So labor cost in this setting does not have to be W-2 employees. It can easily be contract. Maybe you had to do some PRN to cover for people out sick on quarantine or sick or quarantined. Maybe you had a higher contract because your attendance would rather sit on unemployment. Real situation, right? If they replaced an existing attendant that quit, and then that probably is a wash. I don't think that's legit. But if you had to bring in, let's say you have a skilled home care and you have a PAS, and your PAS attendant is paid $9.50 an hour and they're all out, and you got to take one of your CNAs to go do attendance services, and your CNAs paid $15 an hour, then that incremental difference to pay that person to cover those services for sure, right? I mean, you might even get away with the whole 15 an hour. I'm not sure how aggressive they're going to be on scrutinizing those things. COVID bonuses, hey, they went on. Okay, I love this next. Okay, don't forget about this. Newly created positions, contact tracing. You didn't used to do that. Compliance officer. You had somebody doing compliance, but were they doing full-time COVID compliance? If you're a bigger facility or agency, you probably have somebody doing that. Nursing homes. I know we've got 2 nursing homes in the audience, or one person with 2 homes. Think about how you had to, especially if the facility contracted COVID, and you had to segregate things, and you had your COVID wing nurses and everybody else, and they couldn't cross paths. That took extra staff. What about staff for testing temperatures, taking temperatures and all of that, right? So that was all extra staff. All right, I like this. Employee relations and retention. And this is from HHS. It says recruiting cost to secure adequate staff. I personally use a recruiter. It's very expensive, but Amy Knight is very bad at hiring people on her own. So I don't do it anymore. So recruiting cost, LinkedIn ads, high level LinkedIn, but maybe you use a recruiter. There are like nurse staffing recruiters out there. So recruiting costs, a really good one. But hiring bonuses, retention bonuses, I hadn't thought of that. I'm being totally honest. I hadn't thought of that. And I saw that, I got really excited. So I put it all in there. Then meals, what if you added perks because of COVID and you needed people working and not dealing with childcare that was shut down, and you provided childcare, like reimbursement for childcare. Hazard pay would also include related payroll taxes. Yes, ma'am. And so in all of this, fringe benefits is payroll taxes, but yeah, I would absolutely take the employer portion of all the payroll taxes associated with those wages. Even if you just tallied up wages, like let's say you have a $50,000 payroll run and bonuses were $10,000, don't get too detailed, just 7.65% is the employer FICA. You probably want to skip on the FUTA SUTA, but yes, absolutely count it. Transportation reimbursement, temporary housing. Think about what I thought about when I was typing this up is I thought about, I know I had one friend, think about all the nurses that went to New York City to cover COVID when it was going crazy up there and they needed bodies to handle nursing. They were paying lodging, transportation, big bonuses, yada, 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 all of that reimbursable right here. Again, professional fees, you don't want to forget those. Accounting, HR. Did you hire an HR or did you even like maybe subscribe to an HR online service to help you deal with all the HR questions that came out of the very first act, right? Which had the expanded family leave and the emergency sick pay, right? Those two, and you got credits for it, but there were certain rules and you had to do it, but were you essential? Did you have to, like, there was a lot involved in that. Your EPP, your emergency preparedness plan, right? Did you have to like spend a lot of time updating that? I'm sure you did. Did you pay for it? Telephone to cover cost of remote employee cell phone usage, right? Capital inventory and equipment. Now, so this gets a little different. This gets into some accounting rules. Typically, when you buy capital equipment, our internal rule, well, the Medicare rule is anything under $2,500 can be expensed immediately, like fully deducted right then and there. But anything over needs to be capitalized. So if you bought I have no idea how much hospital beds are, but let's say and that's probably not a good example. Let's say you bought a van for patient transportation. Or let's say these examples right here. I don't know what tomography scanners are, but I know what a ventilator is. Say you had to buy ventilators. Normally you would expense those over the life of the equipment. Let's say they last 5 years, you would only take 1/5 of that expense each year. There are special rules that if they're qualified, they can be fully expensed upon purchase. So ventilators, probably a really good one to pay attention to. But all of these others, this mask, face shields, that we are going to normally expense that anyways when it's bought. But I repeated it how HHS had it. Capital projects on your facility. So if you upgraded your HVAC system, if you put in filtration, we bought a bunch of molecule air filtration units. You see them in the restaurants, they bought those blue light cleaning systems. Anything like that can also be expensed. Retrofitting a COVID-19 unit. So let's say you're a nursing facility and you went and retrofitted a wing of your facility to be the COVID unit. Reconfiguring your ICU capabilities. And then I like this one too, because this was a great idea that came up and now HHS has kind of like formalized it. Leasing or purchasing either a temporary structure for screening and testing patients and staff or a permanent facility to increase your capacity in a hospital or nursing home. Now, I also take this a step further, and I mentioned this earlier on, for your office. If I've got two examples. One was, and maybe it's just one example, it was office space, but she had a big building and she officed out of 1/3 of it. And the other 2/3 was all storage and warehouse. It was a hospice. She moved into another 1/3 of that building to space everybody out. I said, that's absolutely legitimate expense. We're going to have to COVID stamp it and put an not attestation, but a narrative with it of why you did that. But yeah, absolutely legit. I've got something flashing at me over here. Oh, it's the chat box. Okay. Don't forget to add GL insurance commented by another trainee. Oh yes, great. See, look, this is a live document right here. Thank you guys. Takes a village, right? I'm just gonna add it to the end. I'm gonna do it right now. Insurance cost. Something like that. That's what the insurance agent's gonna tell you, something like that. For our housekeeping staff, can we claim the time that they spent each week sanitizing the facility under infection control? I believe so. What I would love, and it's probably too late, Karen, but if you do this going forward, especially if you keep getting more payments, what I would do is in your timekeeping system, I would create a pay item or a clock in item, because at a nursing facility, right, you got housekeeping, sometimes they'll go do dietary aid or kitchen support staff, or vice versa, they'll flip around and they'll clock in and out of those different job codes. I would set a job code for COVID sanitation, because if your internal staff isn't doing it, you're hiring a sanitation crew to come in. That's another one. Any kind of sanitation crew that comes in, janitorial, should be on here. But I don't know that it is. Infection control, I'm gonna put it right here. Sanitation. I love sanitation.
There you go.
I do math.
Right, we're accountants. We don't
Yeah.
spell.
And we don't do math in our head either, at least not at my age. I don't. I love that all the carpet cleaning crews, everybody around town, everything is now sanitation services. Get fully sanitized. That's a new thing now. Okay, that's those two. We paid employees for their time off due to quarantine, regardless of positive or negative test. I think that is an includable. So let me rephrase it for everybody. They paid for staff that were quarantined, as long as you didn't claim that payroll tax credit for it, and you don't put it in PPP, then I think that is legit. Now, the flip side would be careful about double counting that. And this gets super granular, but if you're paying somebody to stay quarantined and you're paying a PRN to come in and cover their services, you might be careful about double dipping that. That might be a double dip. It might be really hard for them to find that double dip, but be careful about that. Let's see. Okay, Debbie says, our administrators spend a lot of time reading CDC guidelines. Yes. To keep up with patients, HR department. Oh, I've got another one, mailing cost. I do not think those with significant time have actually kept a specific time log. Yeah. Let's talk about a time study. So basically what Debbie's saying is we've had staff that have done a lot of COVID compliance, but we didn't really do a time study and we didn't code it as a separate job code on their pay. I would encourage you to recreate a time study because they did say if you're going to claim something like that, there needs to be a time study showing it. I'm not going to forget that. Mailing cost. Updates. Right? You had to send out a bunch of mailers to clients, especially PAS clients, attendant services. So that mailing cost, another good one. But back to this, Debbie, I'm sorry to interrupt like that. I just was afraid I would forget. I would encourage you to recreate a time study. A time study is as simple as an Excel worksheet that shows, okay, for this 8 hours, here's what I did. So let's say it's the alternate administrator. And you want to do that every day for a month. And it's going to be hard to go back and recreate it. This is the bulletproof method. If you were audited, that's what they're going to ask for. So I would encourage you, even if you just did it for a week, but I would encourage you to go back and do, or, Yeah, I was gonna say, do one now, right? Do today, have your alternate administrator, hey, I need you to detail all your tasks all day and how much time on each task. There doesn't have to be a punch in, punch out. We're accountants, we do this all the time, and we keep our, we got systems that track how much time we spend on each client, on each project. So it's along those lines. So, staff meeting, 45 minutes, walking the rounds around the nursing facility, whatever it is. If they can do it now, then tell them, okay, take this, back it up to July of last year. What were we doing? We had all these regulations coming out, or maybe it was May and April of last year when all this started. What did your time look like then? And it might be 90% because of their time was spent on COVID related activities. Because if you think about it, I know for us, so our practice I mentioned early on is made up of monthly accounting. And then we've got some year end only, but it was monthly accounting season when all this broke out, which is not true. It was actually busy season, but all got postponed. So we got to ignore it for a while. When this broke out, there were 6 of us on staff. 3 of us liked to be in the office and the other 3 wanted to be work from home. So we said, all right, cool guys, we can't handle all of this compliance work coming at us, all these regulations. People are looking to us for answers to these questions nobody knows yet. I've got to study. Courtney's got to study. So it was me, Courtney, and Paul. So we became the COVID task force in our firm. And then the other team handled all the monthly accounting, and they just kept everything rolling. And so I'm saying this because I could see back in April and May, your alternate administrator may have said, okay, my regular duties, DON, I need you doing this, this, and that. I can't do it right now. I've got to study. I would go back in time there and think about it and say, okay, I remember I basically what I did, I came in at 8 a.m. and I studied until 2, and then I got caught up on my administrator duties and just kind of document that. So what a time study does, ideally you do 1 month out of a quarter. And so you say, okay, for this month, and then you put everything in a bucket. Okay, these were my clinical duties. These were my administrative functions, and this was my COVID duties. And you do a percent, and then you allocate it to the full time. So that's what a time study is, and that's what they're going to ask for if you do try to break it up and you don't have it super clear in payroll. Now, if you had somebody, I would challenge you to think about it this way as well. I don't know, I'm not going to be able to say this right. If you had 3 people doing a third of their job as COVID compliance, could you not say, okay, let's pretend that this one person only did COVID compliance and the other 2 did the other work that she would have normally been doing. And then you basically label her the COVID compliance officer and her full salary is now COVID related. That's the direction I would challenge you to. Again, you guys, this is stuff we don't know what they're going to do or say or accept. That is one that I would do a narrative. They don't necessarily know who sat in on all the webinars, who did all the education, who attended every piece of materials and read everything that came out. And so if you put it maybe on one title, I feel like if you titled that person that way, it would be a lot easier to justify it. So maybe even like a job description, maybe even a formal notice. Okay, effective this date, you are now the COVID compliance officer until further notice. And then maybe let's say it's October and you're caught up, your systems are in place, everything's cool, and they go back to their regular duties. Then you could kind of undo some of that. Just kind of some ways to think about it. So, all right. Janitorial would only be in excess of what we are already paying. I think so. I think that's a conservative approach. If possible, I would say that. Let's say you paid $100 a week for janitorial services, and then you went to $300 a week. I would count the $200 a week as additional sanitation services. That's how I would approach that. Mm-hmm. I think that's all we've got. I'm getting really hungry. Receive stimulus payment when I have to return the unspent amount. Okay, if you received it in 2020, April 2020, and you did not spend it all by June 2020, That is a good question. I'm going to guess that you need to return it by September 30th. I think it will come out of this reporting. I think the reporting is going to say, okay, you have this amount due. Here's how you return it to us. I'm not 100% sure about that, but I think that's how that's going to work. All right, guys. Well, again, I'm going to spend the afternoon getting this all updated. You'll get an email tomorrow afternoon, tomorrow morning, that goes over, that has all of this information in it. I was just trying to see if I had anything else. I guess we're at the end of that. So again, if you need me, if you need us for reporting, we're here. I probably will not be able to answer a whole bunch of email questions because it's just getting too hairy. But again, if there's any significant updates, I'll put them out and I'll send them to everybody. I'll keep this email list. So you guys are welcome. I appreciate you all showing up. And I will say, A, we had almost 100% attendance, and B, usually I'm at about 50% attendance. And everybody stayed on like the whole time. So I love you guys. Let us know what we can do to help. I wish everybody the best of luck on reporting this. Don't overstress it, I guess would be my main thing. Just go with it and get it done, and then all will be well. So, all right, everybody, have a great day, a great rest of your week. I'll see you in a week or two when I get back from vacation. All right, thanks, guys.